So welcome again to the webinar theme, Navigating AML CFT Compliance in Nigeria. It's a panel discussion. Today we're going to be talking about some of the challenges associated with compliance in Nigeria. And we have an intelligent, brilliant, very experienced team of panelists who I will be introducing soon. So thank you so much for joining. We're going to go ahead. I see we have 115 out of the about 600 that registered. So hopefully before we kick off the panel session proper, most of the attendees will be here. Thank you so much. My name is Tosin Ozoya. I'm the head of sales at Probe Compliance, and I will be the coordinator of the event. I'll be handing over to the moderator shortly after I've introduced him. But before we go to that, I'll be taking you through some of the ground rules and what to expect at this session. Okay, so only the panelists will have access to microphones and be able to speak at this session or turn on their cameras. As attendees at this event, you will be able to ask questions at the end, but then you will only be able to type them in the space tag Q&A. So if you look at the top of your screen, there's take control. There's a place at the top that says chat. I don't think you have take control as a guest. So that there's a chat and then there's Q&A. If you have any questions as the session is going on, please type them there and they will be taken at the end of the session. Let's see. Yeah, so that's about it. We would love to see you engage. So as much as we're not allowing you to speak with your microphones, you can send us an emoji. You can clap if you're impressed with a response and whatnot. One key thing to note is that we're going to, yes, thank you so much. I can see people sending emojis. Thank you. Someone is laughing. Okay, that's very good. Please keep it up. Yeah, so we have rewards for engagement today. And what that means is our technology will track and tell us who are the most attentive members of the audience. And the top 5 most attentive members of the audience will receive 5,000 Naira airtime. It's a transparent process. We'll show you how that worked, how that was computed. So please be attentive. There's a lot to learn here. There's a lot to benefit from this session, especially if you are working in the compliance space in any sector at all in Nigeria. If you use compliance technology, if you're looking to acquire compliance technology, this is a good session to join. So without further ado, I will move to introducing our moderator. So I'm going to be stepping back and introducing our brilliant moderator for the day. Next slide, please. All right, so our moderator is none other than Mr. Shino Ayotola, who's the Chief Programs Officer at the Nigerian Governors Forum. Please put your hands together for him. Shino Ayotola is a seasoned professional with an impressive track record and experience that spans over 18 years. He has contributed to the success of organizations such as Access Bank, Polaris Bank, Resource Intermediaries Limited, Sequoia Group, Duca, and the Nigeria Governors Forum. His tenure at these esteemed institutions has solidified his reputation as a dynamic and result-oriented individual. He holds a first degree in anatomy from the University of Ilorin and an MBA from Nexford University. In addition to his remarkable leadership and managerial qualities, Shino possesses a diverse skill set that encompasses various aspects of the corporate world. Throughout his career, he has proven his ability to navigate complex business landscapes, make strategic decisions, and drive profitable and sustainable initiatives that deliver tangible outcomes. As an accomplished individual, Shino is an inspiration to the aspiring professionals, particularly those who are embarking on their journeys. He currently serves as the chairman of the advisory boards of Deborah's Palace Initiative, a Nigerian non-profit organization who's working to address societal challenges by providing young boys with the relevant tools and skills to navigate life. Please give a very big round of applause, virtual round of applause to Mr. Shino Ayotola as I hand over to him. Thank you. Thank you so much.
Thank you very much, Tosin. Please confirm that you can hear me.
Yes.
Thank you very much to the brilliant Tosin, and thanks for having me anchor this session. And a very good morning to everyone who have joined us today. I'm delighted to welcome you all to today's webinar. And as Tosin had previously highlighted, I would like to make this very engaging and as interactive as possible. So I'll just go straight into introducing the members of the panel. I'm not doing this alone. It's a robust conversation. We have very seasoned professionals who are going to provide answers and insights into this very important area or landscape in Nigeria. First off, I'd like to introduce Mr. Lamanti Labatek. Mr. Lamanti is a seasoned compliance and intelligence expert with over 15 years experience in financial intelligence, anti-money laundering, and regulatory compliance. He currently serves as the Assistant Director at the Nigerian Financial Intelligence Unit, NFIU, where he plays a key role in coordinating national efforts in financial crime intelligence, analysis, and strategic compliance enforcement. Prior to his current role, Lamanti served as the Senior Compliance Analyst at the EFCC for over 9 years, where he was instrumental in driving major compliance operations and interagency collaborations. He later transitioned to the NFIU as an Assistant Chief Intelligence Analyst, a position he held from 2018 to 2023, contributing significantly to intelligence-led initiatives and the development of data-driven policies. He has also had a brief stint with the Central Intelligence Agency unit within the Financial Intelligence Unit from 2021 to 2024, further enriching his international exposure and multi-jurisdictional experience. With a deep understanding of financial systems, regulatory frameworks, and intelligence operations, Lamanti is dedicated to strengthening Nigeria's fight against financial crimes through strategic leadership, interagency synergy, and innovative compliance practices. Ladies and gentlemen, please make welcome Mr. Lamanti Labatek to this session. A round of applause, virtual round of applause for him, please.
Thank you very much.
You're welcome, sir. The next person on the panel is Mr. Pius Agbude, who is a seasoned executive and a thought leader with a distinguished career spanning multiple decades in the financial sector, as well as enterprise transformation, digital innovation, and policy orchestration. He holds a bachelor's degree from the prestigious Obafemi Awolowo University, Ile-Ife, and an advanced diploma in banking and finance from Manchester Business School, United Kingdom. Pius is a certified expert in risk management and compliance, process improvement, and project management, holding globally recognized certifications such as CAMS, Lean Six Sigma Black Belt, Scrum Master, Project Management Professional, and ProSci Change Manager. He has also received extensive executive management training from world-renowned institutions, including INSEAD in France, Harvard University, Cornell University, and the Lagos Business School. His professional expertise, having served at senior management level in the compliance function of a large tier 1 retail bank in Nigeria, as well as orchestrating huge transformation programs, working as a consultant, spans critical areas such as enterprise risk management, strategy development and execution, process re-engineering, and enterprise change management. Pius currently serves as executive director with Simply Alpha Consulting Limited and an AML compliance specialist firm, while at the same time serving as a board advisory member for Probe Compliance Africa. Please make welcome Mr. Pius Agbude to this session. Thank you.
Thank you.
Can we move to the next slide, please? Okay, so the third member of the panel is Mr. Olagoke Salau. He is a seasoned financial services professional with deep expertise in regulatory and compliance risk management. He's a chartered banker and holds cross-functional certifications spanning anti-financial crime, anti-fraud, AML/CFT, IT/IS risk management and audit, including CFCS, CMS, CFE, CISA, CRISC, and ISO-led auditor credentials. Olagoke has distinguished experience across both traditional finance, which is commercial and microfinance banking, and emerging financial technologies, covering sectors such as paytech, digital banking, virtual assets, and international money transfer services. His track record includes developing innovative, solution-oriented compliance strategies that address the evolving risk landscape in financial services. He's a recognized thought leader and frequent speaker on compliance best practices, digital finance trends, risk oversight, and financial crime prevention. He currently serves as the president of the Nigeria chapter of the Association of Certified Financial Crime Specialists and leads the Ethics and Compliance Club at the Lagos Business School. He's passionate about fostering a culture of integrity. Olagoke is committed to driving bold industry-wide initiatives to elevate ethical standards and strengthen compliance frameworks across financial ecosystems. Please make welcome Mr. Olagoke Salau to our session this morning. So next up, I'd like to introduce Yetunde Olashope. Yetunde is the founding principal at Lexworth Legal Partners. She holds a Bachelor of Laws degree from the University of Ibadan, Nigeria, and a Master of Laws degree from the London School of Economics and Political Science. She possesses 18 years experience in legal practice as both a practitioner in a law firm and as an advisor on legal matters within corporate entities. She is a member of the Chartered Institute of Arbitrators in the UK and is currently undertaking an executive management course at the Lagos Business School. Yetunde's work experience is garnered from one of Nigeria's leading law firms, where she served as a core member of the corporate, commercial, and finance practice teams. From Templars, she moved to a Nigerian conglomerate, where she served as manager, legal and regulatory affairs, and team lead for commercial transactions. She has also served as head of legal and compliance at Financial Services Group, a role which she combined with being legal advisor to companies within the group, which included a stockbroking firm, a microfinance bank, and a financial advisory services business. Prior to founding Lexworth, Yetunde was a partner at Macpherson Barristers and Solicitors, a full-service and vibrant commercial law practice in Lagos, Nigeria. Ladies and gentlemen, please make welcome Yetunde Olashope to the session this morning. And Yetunde, you're welcome.
Thank you very much.
Next up, I'd like to introduce Mr. Akinyemi Oluwanifemi. He is a highly experienced risk and compliance professional with over 10 years of expertise in microfinance banking, risk management, regulatory compliance, and internal control. As the head of risk and compliance at Imo Microfinance Bank, he leads risk management strategies, regulatory compliance frameworks, and internal control initiatives to enhance financial stability. Throughout his career, Akinyemi has played key roles in credit risk analysis, AML/CFT administration, enterprise risk management, and operational risk assessment across institutions such as Action Microfinance Bank, Assets Microfinance Bank, a member of the Canary Point Corporate Services Group, and Advanced Lafayette Microfinance Bank. A certified microfinance banker and an associate of the Association of Enterprise Risk Management Professionals, Mr. Oluwanifemi combines financial expertise with data-driven risk analysis, leveraging tools like Microsoft Excel, SQL, and Power BI for strategic decision-making. Passionate about fostering compliance awareness and training professionals. Akinyemi is committed to shaping the future of risk management in the financial sector. Please make welcome Mr. Oluwanifemi Akinyemi. You're welcome, sir, to this session.
Thank you very much.
Next up, I'd like to make welcome Mr. Chiaka Eguzoro. Mr. Chiaka is a seasoned banker, current registered engineer, and graduate of the Federal University of Technology, Owerri. He began his banking career in 2007 at the United Bank for Africa, where he held roles including electronic banking officer, branch operations manager, and business relationship manager. His interest in microfinance began in 2020 while leading a turnaround project for a struggling microfinance bank. In 2021, he was appointed managing director of Earnwell Microfinance Bank Limited, where he has led a successful digital transformation of the bank's operations. Chiaka is a fellow of the Chartered Institute of Loans and Risk Management of Nigeria, a member of the Nigerian Society of Engineers, a certified microfinance banker, and a member of the Polymer Institute of Nigeria. He left mainstream banking in 2016 to serve in various technical and advisory roles in Imo State, including as special advisor in the Ministries of Agriculture and Internal Revenue, and as special assistant to the Commissioner of Finance. He later joined Renewal Consulting Limited in 2019 as a technical partner, contributing to business recovery projects. A committed Christian, Chiaka is an ordained elder in the Seventh-day Adventist Church and currently serves as Associate Director of Public Campus Ministries in the Eastern Nigeria Union Conference covering 9 states. He's married to Jules and blessed with 4 children. Please make welcome Mr. Chiaka Eguzoro. Mr. Chiaka, you're welcome to the session this morning. Okay, next up, I'd like to make welcome Mr. Samuel Boham. Samuel is the Chief Technology Officer and co-founder of Probe Compliance Africa Limited, a technology company specializing in compliance and anti-money laundering / counter-financing of terrorism regulation solutions. In his role, Sam oversees the company's technological strategy, ensuring that it aligns with business objectives and drives growth. With over 15 years experience in an IT consultancy, Sam has built a diverse career spanning multiple technology disciplines. He holds a Master of Engineering in Computer Systems Engineering, UK. Sam began his tech career in 2007 as an ICT support engineer at Schlumberger Nigeria Limited, where he contributed to managing the company's IT infrastructure in Lagos, supporting staff and resolving technical issues. In 2015, he transitioned into ICT consultancy, where he worked on a wide range of projects and developed platforms and products across domains such as digital marketing automation, AI chatbot development, game design, geospatial data analysis, cryptocurrency, and blockchain development, digital CV skills analytics, online business directory management, oil and gas data aggregation, traffic data analysis, and social network development. Passionate about lifelong learning, thought collaboration, and the application of technology to solve real-world problems, Sam is dedicated to improving business operations and enhancing quality of life through innovative solutions. Mr. Samuel Boham, you're welcome to the session this morning.
Good morning, everyone. Thanks for having me.
Okay, next up, I'd like to make welcome and introduce Mr. Obinna Okafor, who is a seasoned professional with over 20 years of experience in accounting, internal audit, and compliance across the financial services, logistics, and education sectors. He is the managing director and CEO of Vicos Bain Consult Limited, a leading Nigerian management consulting firm. He previously served as Chief Compliance Officer and Group Head of Internal Control and Compliance at IEI PLC, where he established the compliance unit and sat on several key committees. He also held leadership roles at Guinea Insurance PLC and Afribank Insurance Brokers Limited. Obina has chaired and served on numerous national and international professional bodies, including the Nigerian Insurers Association, Chartered Institute for Securities and Investments, SWAIP, IFCA, ACCPA, and Compliance Institute Nigeria, where he currently chairs the PEEC. An expert facilitator and trainer, he leads sessions on AML strategy and IFRS for financial institutions and corporates. He lectures part-time at the College of Insurance and Financial Management and mentors through the Tony Elumelu Foundation. Obina is a published author, motivational speaker, career coach, passionate about youth development, corporate governance, and human capital. Ladies and gentlemen, please make welcome Mr. Obina Okafor to our session this morning. Mr. Obina, you're welcome.
Thank you very much, for having me. Thank you, colleagues.
Right. Oh, okay. So we'll just jump right into it. As we can see, I have a very experienced group of panelists, and I know that we're going to have an amazing time having this conversation today. So my first round of questions will go to Mr. Lamanti, Chiaka, and Ms. Yetunde. Could you just briefly describe your organization's role in the fight against money laundering and terrorist financing in Nigeria? And I'll ask Yetunde to please start, and then we can go to Lamanti and Chiaka.
Okay, thank you very much, and good morning again, everyone, my esteemed panelists and the facilitator and our viewing audience. So without further ado, we'll just jump right into it. As already mentioned during my introduction, I work in a law firm, established a law firm. So as a legal practitioner, our role is very key in the fight against, AML, CFT, and proliferation financing. So as lawyers, can you hear me? I think I heard someone.
Yes, Yetunde, I can hear you. I'll
Okay.
just, urge my other panelists and every other person in the audience to please mute your mic. Thank you. Yetunde, please proceed.
Okay, so I will start with a known fact and an interesting fact that, as we know, Nigeria has been grey listed by the Financial Action Task Force, and they found deficiencies in, our anti-money laundering, I'll just call it AML, CFT, proliferation financing, just to use the acronyms to make it shorter. And because of that, of course, there's heightened regulation and heightened scrutiny in, Nigeria's AML, CFT regime and policy. As legal practitioners, of course, as our role, we represent all sorts of clients, transactions. The legal profession has been identified as one of the key risks, one of the risk areas where, we need to ensure that, there's additional scrutiny, enhanced due diligence, etc. The grey listing was done in 2023. Before that, there was a 2022 Anti-Money Laundering Act, which brought in, new innovation and, additional rules and regulations for anti-money laundering, which was a good development. Unfortunately, Nigeria still got grey listed, and of course, it brought bodies like the NFIU, EFCC, and the federal government in general to, look deeper and scrutinize these things deeper. So definitely, as a law firm, we, under the 2022 Act that I've just mentioned, are identified as designated non-financial businesses and professions. And in that instance, we have to register. We're mandated to register with SCOMO, that's the Special Control Unit, in charge of money laundering under the AFCC. And once we do that registration, of course, we have to file returns, suspicious transaction reports, currency transaction reports, and the like. I will not be given a full picture if I don't mention that, of course, as lawyers, we all know that we have the client, lawyer, confidentiality concerns. And from the very beginning of the AML, CFT regime, we've had our body, that's the Nigerian Bar Association, push back a little about the applicability of this. Not that we do not respect AML CFT and the need to do and undertake, customer due diligence, enhanced due diligence, depending on the risk profile, risk-based compliance. But at the same time, we have to balance that against the confidentiality obligations we have towards our clients as lawyers. So in this instance, historically, there's been a lot of pushback, even decided cases where lawyers were able to escape the formal reporting, as it were. Record keeping, no, because that's essential. But with the 2022 Act, that all changed, and with our designation as non-financial businesses and professions. So we do have to render those returns, etc. But I must say that MBA is still running, trying to protect in the bid to continue to protect our clients and the clients, lawyer relationship and confidentiality. A committee has been set up by our regulatory body, that's the self-regulatory organization, the Nigerian Bar Association. So there's a money laundering committee that has been set up, and that is fully functional. They're bringing up policies, procedures, templates for returns, etc. Because we feel like as lawyers, and we have to maintain the sanctity of our profession while we uphold AML, CFT, requirements. We also still need to protect our clients. So it's ongoing, it's parallel. But as you know, for a lot of us lawyers that work for financial institutions, for instance, it's mandatory if we, for example, want to be signed up or retained. One of the first things they would ask us is for our SCUMO registration. So whether we like it or not, it's something that we need to do. We need to comply and continue to comply. So in a nutshell, I don't want to go on for too long. We have to comply, and that's how lawyers, law firms, Lexworth, my organization being one of them, help in this fight against anti-money laundering, the countering terrorist financing and proliferation financing as well. Thank you.
Thank you very much. Yeah, thank you very much, Yetunde, for that sort of like insight into how your organization and your profession, contributes to the fight against money laundering, again, while protecting, clients' lawyer privileges. So I'd like to ask Mr. Lamati to jump into this conversation. Your organization is very critical. So just give us a brief description of how you fight against money laundering and terrorist financing.
Okay, thank you very much. As it was stated earlier, the Nigerian Financial Intelligence Unit is the central agency that is saddled with the responsibility for coordinating AML CFT in Nigeria. Prior to that, the Section 2 of the EFCC Act designated the EFCC before now as the central intelligence unit for Nigeria. But there was need for the NFIU to be independent so as to serve other stakeholders. So the NFIU Establishment Act was passed in 2018, which made the NFIU autonomous. Although it's domiciled within the CBN, which is domiciled within the CBN, but it's a love and hate relationship. So we receive disclosures from financial institutions. The way SCUMO supervises the DNFVPs. So we collect disclosures from commercial banks, microfinance banks, capital markets. These disclosures are now analyzed by the sector-specific analysts, and these intelligence packages are sent to the relevant law enforcement or regulators. Now, if it's something that is related to, let's say, drugs, the intelligence package will now be sent to the NDLEA. If it's in the case of maybe terrorism financing or terrorism, this will be sent to the DSS. And also, we also send disclosures to the central banks and other regulators. One of our core functions is also to receive suspicious transaction reports and threshold-based transaction reports. Threshold-based transaction reports, I'm talking of your currency transaction report or foreign transaction reports. These are reports that for transactions that are $10,000 or its equivalent in any other currency. So the major schedule of the NFIU is to also how do I put it? Is to coordinate the fight against AML CFT. So one of the other things that we do is also we sensitize other stakeholders. We also have our domestic remit, which is we serve as the secretariat for the Interministerial Committee on Anti-Money Laundering, and we are an administrative type FIU. So, and we're also the secretariat of the National Sanctions Committee. Our international remit, we liaise with other partner FIUs across the world through the Egmont Group and also the FATF and also international stakeholders like GIABA. We also advise law enforcement and regulatory agencies on ways to prevent and combat money laundering. We also exchange information with other partner FIUs, and also we do our research on emerging threats as relates to AML and terrorism financing, and we also strengthen compliance with fellow law enforcement agents. So in a nutshell, that's what we do in the NFIU. It's quite broad, but I just wanted to shorten it so that my fellow panelists can also jump in. Thank you.
Yeah, thank you so much, Mr. Lamanti, for giving us that insight. I mean, the NFIU is a critical organization in this particular fight. So I'd just like Mr. Cheka to also, share with us how his organization fights, contributes to the fight against money laundering and terrorist financing in Nigeria.
All right, thank you, Mr. Shina. Thank you, experienced panelists, and then our wonderful audience. Having worked in both in commercial bank, government sector, and then in microfinance bank, I would like to summarize the role of the bank in 7 key areas, in fight against money laundering in 7 key areas. The first is the customer due diligence. Because the bank is always the entry point of illicit funds, it is important that banks identify and verify the identities of their customers, both natural, that's individual, and the legal persons, using reliable and independent source documents. So if somebody is bringing any identity, you must make sure they are validated and verified. By extension, the banks are also expected to know the ultimate beneficiary owner of every new account they want to onboard. Then the second one is the customer segment profiling, or what we call the risk appetite of a bank. Generally, there are some customers that are profiled high risk, some low and medium. So every bank should be able to profile a segment of nature of businesses. Yeah, NFIU and EFs have tried to bring some that are called designated non-financial, and they must have SCOMEL. Outside that, we also have the customers like the political exposed, then we have bureau de change and others. So the bank must identify, they must have a profile, how to profile these customers and assess their risk. The next is monitoring of transactions. Every bank must have a tool to monitor transactions, both suspicious, large sum, unusual transaction patterns, then also transactions involving high-risk jurisdictions. The banks must have the tool to monitor these transactions. No matter the number of customers you have, you are obligated by law to monitor the transactions of the customers. And that's why risk profiling is important at the point of onboarding the customer. You must be able to know if the customer's transaction is in line with the profiling of the customer, and by extension, in line with what he said he's used to or what he's doing, right? The next one, which is also important, like the NFIU man said, he mentioned the reporting of suspicious transaction. So the bank is obligated to report any transaction that is said to be suspicious. You can only identify a suspicious transaction if you know a pattern or if you have a tool to monitor these transactions. And then you're also obligated to report thresholds, like he mentioned, $10,000 or its equivalent in foreign currencies, then threshold exceeding 5 million naira for individuals and 10 million naira for corporate organizations, both cash and transfers. The next that a bank is obligated to do at all times is to implement anti-money laundering and counterterrorism policies and procedures. Every bank must have it in all their policies concerning all the stakeholders, both the directors, the staff, and the customers. The bank must implement policies and also procedures. And not just implementing, at this point, the bank must ensure that every staff understand their role in anti-money laundering. Every staff must understand what is expected of them. And by extension, every staff should also understand the implication, the penalties of contravening or not complying with the regulations of the AML, especially in the area of tipping off. Every staff must understand the penalty, the sanctions of not adhering to the AML policies. So the bank must implement these policies to the letter. Every stakeholder in the bank must understand his or her role in implementing anti-money laundering policy. And the procedures must be spelled out by every person. So every person should understand it. The next role the bank plays, which is the sixth role, is collaborating with law enforcement. The bank must collaborate at every point in time, no matter who the customer is, to report when it's important. And then if somebody is supposed to be handed over to law enforcement agents, the bank must ensure that they do what is required at every point in time. If somebody is to be sent, if the details will be sent to EFCC, or if the EFCC is requesting for the document of any customer, the bank is obligated to send those details without tipping off, without letting the customer know that this is account or he's being investigated. Finally, the bank should understand their role in record keeping and retention. For every transaction with a customer, you must keep the record for at least 5 years, even when the business relationship has ended. The bank is obligated to retain all the documents concerning the transactions. These are the 7 key roles that a bank is expected to play, and they are still very crucial in fight against money laundering. Thank you.
Thank you very much, Mr. Chair. Absolutely spot on, and I like the way you explained in detail the role of financial institutions in the fight against money laundering. To our audience, please ensure that you type in your questions in the Q&A section, so that we can provide the responses to them as the session goes on. So there's something that we have sort of like touched on, especially with Mr. Chiaka's submission. And I'd like Mr. Samuel to respond to this question in respect to, so we have a lot of emerging technologies, right? We have AI and blockchain. How can we use these emerging technologies how can we use them to detect and prevent terrorist financing activities in Nigeria? So Nigeria is we have, both the formal and informal financial systems, but the informal financial systems are much larger. We also have the challenges with digital infrastructure, with respect to internet penetration across the country and all of that. So how can we then leverage, this new tech to fight and prevent terrorist financing activities in Nigeria? Mr. Samuel.
Okay, thank you very much, Mr. Ashino. Thanks to my esteemed panelists and facilitators and the audience in attendance. Yeah, this is actually a really, really interesting question. So before we analyze the solutions, we need to take a look at the methods that the terrorists are currently using. So two of the most common methods that they use are money mules, which is pretty much just rather than doing the transactions themselves, they leverage other people, me and you or their colleagues to facilitate these transactions. So that's why it's very important that, before you perform any transactions for anyone, you scrutinize a little bit, you ask some questions and you determine. Another popular method is known as Hawala. So Hawala is, let me just take a moment to try to explain how this concept works. So Hawala has been around for like a long time now, centuries. It's used by different regions around the world. So what it pretty much involves is it's very informal. It doesn't necessarily use the existing banking system. In some cases, some parts of it may use it, but it largely doesn't. So a good example of how it works is, imagine if somebody, let's say customer A in country A, is trying to send funds to customer B in country B. So typically what would happen right now with the current banking system is that, you go to your mobile app, or you go to, the bank and you make the transfer, and the transfer goes directly to customer B. But they bypass this using an agent system. So customer A will look for a Hawala agent in country A and give them the money. Let's just say, for the sake of the example, $500 or something. And the Hawala agent would receive that money and get the information about who they needed transferred to in country B. They would generate a specific code, some kind of like a unique identifier, and they'll send it to the Hawala agent in country B. So in country B, that Hawala agent will be expecting someone to come and claim that money with that specific code to identify themselves. So when customer B comes in, gives them the code, verifies their identity, they can now receive the funds from the Hawala agent in country B. And of course, along the way, there's commissions and things like that. But the interesting thing about that concept is that money hasn't been transferred. So it's like a trust system. The agent in country A doesn't facilitate any transfer to the agent in country B. They just trust each other that, okay, don't worry, we'll put it in our ledgers, in our books, and later on we'll settle each other in one way or another. So of course, there are different ways that they can settle each other, either by, I don't know, in the future, if one agent wants to buy something from the other agent's country, they will just add that $500 as a markup on the invoice of whatever it is they're trying to purchase. So as you can imagine, if you picture that now, how can you possibly use technology to detect that kind of scenario? Because, money hasn't been transmitted through the banking channels. So what you need to do is, in some cases, like when customer A made that initial $500 deposit, he probably used cash, or he probably transferred it to the agent's account. So you have to look for the digital footprints in that whole process. Maybe at that point, or the point where the agent in country B hands they can transfer it to the customer in country B, or actually withdraw the cash and transfer it to the customer in country B. So these digital footprints is what you have to look out for. And this is where the application of artificial intelligence in the monitoring of transactions, it comes into play. So AI is really good at detecting patterns. That's one really good application of AI. It can detect all these suspicious patterns in the way money flows through the transaction network. So say, for example, now you can set up different rules or train AI to detect patterns like, irregular cash deposits or withdrawals, irregular transfers of cash to different people. If somebody is not registered as a business, a bureau de change, or any kind of commercial entity, and you see them transferring a lot of funds, to different people, that would indicate that the person is doing something commercial, but they're not registered with the CBN or anything, or with the CAC, sorry, rather, as any kind of commercial entity. So that's where AI plays a very, very good role. Geolocation comes into play as well too. So of course, there are different areas of the country in Nigeria that are known for terrorist activity, while some areas are not known for it at all. So if these transactions are occurring in high risk areas, that should also increase the risk associated with that particular transaction. AI needs data, so it can't just determine these patterns on its own. It needs a lot of data to be fed into it, and this is where government agencies like the NFIU, CBN, with the Nigerian Sanctions Committee plays a key role. They've done a fantastic job in the past couple of they've been doing a pretty good job with updating and maintaining their list of sanctioned individuals and entities in Nigeria. And this is what the AI can now use this list and compare it, beneficiaries, recipients, to be able to easily detect when, either one of these sanctioned individuals or entities are involved in the transaction, or somebody in their network. So AI, for example, now, if it analyzes your profile, it can tell you that, okay, for you as an individual, these are the people that you regularly transfer money to and receive money from. So AI can be able to interpret that and know, okay, you may not be sanctioned, but part of your network or people that you regularly transfer and receive money to, a sanctioned individual is on your network. So these are smart ways that AI can also detect this. Also, the GoML platform as well plays a very, very critical, crucial role. The fact that all financial institutions and DNFBPS, they all submit their suspicious transaction reports, cash transaction reports. A lot of processing is done on these reports to be able to detect all these, money laundering, financing of terrorism, and disseminate the information and the intelligence gathered from this to all participating agencies and institutions. Let me just quickly drop on crypto and blockchain. So blockchain is an very interesting topic. I'm not sure how conversant everybody is here on blockchain, but it's pretty much like a public ledger. It's immutable in the sense that you can't edit or delete or modify the content once it's written on the blockchain, and it's decentralized. So not any one agency has a monopoly or has dominant control over the technology. So transaction monitoring, pattern recognition. When it comes to individual companies, you have to be able to extract the data from those companies to be able to run the monitoring, the pattern recognition. But with the blockchain, that information is out there on the public space, so you can easily connect to it to be able to detect, patterns of money laundering and financing of terrorism or any kind of illegal activity at all. But the thing about the blockchain is that it's anonymous. Sorry about that. It's anonymous. So the fact that it's anonymous means that it's difficult to know who is responsible for specific transactions on the blockchain. So regulated exchanges, they have a procedure to follow. They do KYC, they do customer due diligence, and they know which individuals are responsible for the transfers of the funds. So for example, if I have a crypto wallet and I send it to another customer, and that customer is trying to convert their crypto to fiat cash, if they send it to the blockchain and if they send it to the regulated exchange, then the exchange knows that, okay, customer A is the one that received those funds. And since they've done their KYC, they know the name of the individual and they know all those information. So they can now tell, okay, this is the person that received those funds. And in some cases, in some instances, the terrorists, they may make mistakes on social media. They may put information about their wallet, crypto wallet. We can also help you to associate them with their names. And in some cases, the DSS, like one of my esteemed panelists mentioned earlier on, that handle terrorist situations, they can perform sting operations, undercover operations, to be able to determine if okay, let's say, for example, I'm an undercover agent. I'm trying to get information about a terrorist organization, and I front as a arms dealer, for example, and I tell them that, okay, I'm gonna give you these arms, just send the funds to me, and I'll give you my crypto wallet address. And once they get that crypto wallet information, then they can move on to associate this individual or terrorist organization with a wallet. Just to quickly touch on NGOs and their role as well too. So a lot of NGOs, they use as fronts. Is there? Hello?
Okay, again, sorry about that, Sam. No, we can hear you. I'd just like to encourage again, if you're just joining, please mute your mic. If your mic is on, please just mute it. Thank you. Please go on, Sam. You may want to round up now because of time.
Okay. I'll try to be quick. So a lot of NGOs are used as fronts by terrorist organizations. So as you can imagine, a lot of them are they have like a shell company structure where companies own the NGOs and other companies own those companies before you have to go down to the actual individuals that own the companies. So one of my esteemed panelists mentioned earlier on about ultimate beneficial ownership. So that's where that comes into play as well, to being able to go through the multiple steps to determine who are these individuals that owns these NGOs. So that's also very, very important. We all heard about the recent news recent news about US aid and the allegations that they've been funding terrorists. Most of these US aid funds actually go to NGOs, and because not enough due diligence is being done at that top level, it ends up getting into the hands of these terrorist organizations. On social media, AI is very good at natural language processing. So being able to determine intent and sentiment of speech. So while a human being can easily read through a social media post and determine, okay, this is what this person is talking about. This person is trying to solicit for terrorism or something like that. AI can now do that as well too. So by running AI on social media boards, X, Instagram, Facebook, message boards, dark web forums, things like that, you can determine where they can know when such discussions are happening and link them to individuals that own the social media accounts. And finally, just to wrap up on partnerships, that's very, very important. We need to foster more partnerships between fintechs, telecom agencies, security agencies, to be able to bridge these digital gaps. Mobile money, has been very good at reaching the unbanked in the country, and government drives like NI and BVN, cashless drives, things like that. They've been also very pivotal in ensuring, there's ensuring that most people, are brought onto the digital landscape, in terms of regions that are, low infrastructure regions. That's pretty much it. Thank you very much.
All right, thank you very much, Samuel, for that elaborate, insight into how we can use technology to fight and prevent against terrorist financing. I'd just like to reemphasize your last point in terms of collaboration. Deepen collaboration between all the players in this particular terrorism financing. So I'd like to invite Mr. Obina. How have recent regulatory challenges, both locally and globally, impacted the landscape of AML and CFT compliance in Nigeria? Do you want to share if there are any specific challenges being faced by commercial banks, financial institutions, or DNFBs in adapting to these regulations? Because most times regulators want to they observe something that's going on in the country, and then to protect our financial systems, they make changes. So how have the recent changes affected commercial banks and FIs?
Okay, thank you very much, Shino, and thank you very much, fellow colleagues and viewers, listeners. I'll talk briefly about some of the changes that have taken place from the global space to the local space and how it have affected or how the fight against money laundering, terrorism financing, operation financing so far, and how Nigerian operators, reporting entities like financial institutions and the financial and professionals are receiving it. To a large extent, the good, the bad, and the ugly around it. So I'm looking at it from the UK point of view, the US, the EU, and FATF being the body. So from the EU point of view, recent times there have been laws that was passed around the AI acts. Now, because these are compliance issues that has connection to money laundering, because one way or the other, they have a link to how financial crimes could be committed, the EU came up with an AI Act 2024, highlighting the obligations of providers and developers to high risks users, and also came up with Digital Operation Resilience Act 2023, also talking about how that could be implemented. I think that started implementation by 2025 January, how financial institutions, banks, insurance, investment firms, and other financial entities should withstand and respond to and recover from IT information breaches and cyber attacks, which are all designated what I call it as predicate offenses. They also talked in 2024, implementable 2024 or 2023, the CFT implementation that was now enlarged or to be implemented among others to include cryptocurrencies and casinos as part of it. And the Data Act also was issued in 2023. That's all about the EU. Now, why some of these things are this? Because what happens across the globe is brought down here. So that's why it's important, whatever the implementations, because Nigeria being a signatory to global international businesses, whatever comes up there, our business interactions also have a role of in connecting to each other. So the EU-US Data Privacy Framework was also signed in 2023. The UK Corporate Governance Code was reformed for 2024. These are all compliance issues that has to come up with that. The US also came up with transparency and priority of foreign corrupt practices. But the FATF also had some changes in their method of assessing technical compliances. In 2022, they reviewed the criteria which was used in conducting mutual evaluations, which were also updated in 2024 August. Now, some of the things that was looked at was to focus more on non-financial business and professionals, because before this time, it appears that financial institutions were mostly the focus. And some criminals also realized that the focus was more on the financial institutions than the bank. They also devised means of going to the non-financial institution business and professionals. They also have come up with effectiveness or recommended effectiveness of laws to be put in place respective of various countries, and result-oriented actions such as investigations and conviction was encouraged. And also talk about the issue of current round of evaluation that will now take 6-year cycle as against the 10-year cycle it used to be. Apart from that, also FATF also reviewed not-for-profit organizations and NGOs. Now, what that means for that was because before this time, every non-for-profit organization or NGOs were considered as high-risk businesses, and that is why you realize that bank had issues implementing this, and the NGOs, genuine ones, had issues also complying with it, because genuine ones who were they are doing does not have anything to do. Those are reputable vehicles for sponsoring terrorism. But FATF reviewed that recommendation from 2023 up to last year, now requiring that it should only be on at-risk NGOs or NPOs that should be subjected to that CFT implementation, which means that this now flowing back to the bank is still having challenge, because we're talking about the challenges now. The bank is still having challenges with Trump's, whether they are to comply with SCUMO, because SCUMO is one that directly dealing with the designated of financial professionals. SCUMO have said that yes, they are modifying, or they have reviewed their stand. It's no longer what it is. But CBN, the bank is waiting for CBN to give. So that's lacuna of conflict between who to apply. That's why you're still having, I think, somebody yet in there also was talking about the challenge banks are still having, that every transaction you want to put that will require SCUMO certificate. So FATF have modified that requirement by their recommendation 8, modifying that it shouldn't be so. Not every NPOs and NGOs should be subjected to MSC implementation, and that is still a problem. But coming down to local laws, the country have come up with a series of laws in recent times that are aimed at strengthening compliance against financial crimes and money laundering, especially. We talk about the Investment and Security Act having passed just this year. We'll talk about also Nigerian Data Protection Act that was passed in 2023. We'll talk about the tax reform bill that is ongoing now. We also talk about the major change that took place in 2022. Yesterday also alluded to the fact that we are grey-listed while we're just coming out from the act. Now, in 2022, Nigeria had 3 major acts that came up that was supposed to be a very massive milestone. Unfortunately, it appears that what our law was saying was different from what the practice were having on ground. Now, the 3 laws were: number 1, Money Laundering Prevention and Prohibition Act of 2022, the Terrorism Prevention and Prohibition Act of 2022, and the Proceeds of Crime Recovery and Management Act of 2022. Now, all these were also codified by the various regulations in the various industries. We have AML, CFT, CPF regulations by CBN, by NICOM, by SEC, and also for SCUMU. While CBN, NICOM, and SEC were regulations for their various industries, SCUMU were for designated non-financial business and professionals, which codified kind of domesticated what should be done in those various industries. Now, this has gone a long way to making sure that implementations, the AML-CFT implementation or the fight against terrorism is more tightened, because the laws came up with more novel recommendations that now put into consideration something that the law had to expand those who were subjected for the profession, even though the lawyers have also gone to court to upturn that section of the law, and also made the issue that has to do with reporting requirement has been broadened, not only requiring that financial institutions or even individuals can do a voluntary reporting requirement. So that became broad. But then, what are the implications? What are some of the challenges? Number 1, the emerging new and potential risk. With development and updating of policies and procedures. So whoever had policies and procedures that were up to ensure that implemented and press. Apart from that, also a lot of knowledge gaps implemented. I believe that some of the challenges that we are having today with businesses in transaction with clients, customers are having challenges complying with some of these things, because it appears all of them came at the same time. The requirements by the banks, requirement by financial institutions, and so on and so forth. Some of them are restricted, some accounts are restricted from being operational, some are flagged because of non-compliance. Some banks or financial institutions have been sanctioned by primary regulators because of trying to manage in between the two. Apart from that, the adoption of these new laws that require most of times to implement technology to drive them also brought about cost of operation going high. And of course, when the cost of operation goes high, it also transfers to the public that consumes that. So apart from that, also it ensures compliance, regulatory narrative to avoid fines and all of that. And again, some form of implementation confusion, like I said earlier on, that when some of the changes are made, sometimes the primary regulators may not drive it down as expected. Like I said, the issue of MPO trying to implement FATF recommendation 8. SCUMU in various forums have said not all NGOs or MPOs should be subjected to requirement from SCUMU. And yet, the banks are still insisting that you must provide this SCUMU certificate for your account to be open. Why? Because if CBN regulators come for inspection, they'll request for it and they are fined for it. So that lacuna is still in that point. And so what I think we just need to have is to continue to engage ourselves, have more working groups that can house all key stakeholders, discuss this and agree on a common front, like what is also trying to do now by bringing insurance, risk audit and compliance committees as well as to come out. So all various industries should begin to work together with other stakeholders to ensure, and again, drive as much as possible some of the things to be able to streamline some of the have been imposed by this law, so that the most important thing is the implementation of the compliance requirement and not any form of a sanction requirement. So those are the basic things I can talk about in that point. Thank you very much.
Okay. Thank you, Mr. Obina, again for your response to that question. To our audience, please remember there's a reward for engagement. So I'd like you to please keep your questions coming in, but please drop them in the Q&A box. Also, respond. You can show it by emojis, clap of hands, and the likes to show that you are engaged in this session. Mr. Olagoke, just very briefly, can you provide us with some insight into what are some of the most significant risks currently facing Nigeria's financial system in terms of AML, CFT compliance? I know you work on the financial institution, and so you'd probably shed more light on how banks can mitigate these risks.
Okay, thank you, Mr. Shino. Good morning, everyone. I think, and I believe strongly, that a lot of the risks are well known to everyone. The fight against money laundering is age-old at this point. In terms of from the financial systems perspective, I think the risk is fairly uniform across board. One of our major risks is cash. Cash that is untraceable. You can't, if I give you cash, it doesn't go anywhere. You can't see it, you can't track it, you don't know what I use it for, you don't know who, when you gave it, you don't know where it's coming from. So that's one of the major risks we have. Another risk we have, unfortunately, is the pervasion of unlicensed financial institutions. I don't want to call them financial institutions, unlicensed institutions who play in the financial ecosystem. So we have, recently there has been a great perversion of it. Everybody's providing financial intimidation of one way or the other. People are collecting, people are, transacting, and a lot of these guys don't have licenses, and therefore they do not put in the necessary controls or risk mitigants in place. We also have, beneficial ownership issues. Generally as a country, if you look at our last mutual evaluation report, you notice that there were still a lot of issues in terms of beneficial ownership. And what are those issues? The problem is that today it is very difficult to reconcile the ownership of legal persons and arrangements. I know the CAC has been doing a lot of work. I think last year or so, they came up with the beneficial ownership register, which I think they are still backloading now. Is not robust enough yet. They also came up with, they have been doing a lot of, additions to their platforms. But it still remains an issue because you can see the perversion of shell companies and shelf companies. I think the shell company was how CBEX was able to get through. They put up a shell company and got, and had people pay to them. We also have the one I know a lot of people are waiting for me to say. We have the BDCs, the agency banking. Today, and not to throw them on that bus, but from the financial system perspective, that's still a weak link. I know the CBN has been doing a lot of work in terms of the BDCs. They rolled out a new regulation for them last year, requiring that all of them submit their licenses and then get new licenses after fulfilling certain requirements. Also, agency banking as well. There's been a recent guidance and circular, around what they should or they should not do. But ultimately, those are some of the gaps and vulnerabilities we have in the ecosystem. Then also we have the proliferation of new and emerging technologies, in terms of virtual assets, in terms of wallets, in terms of some of our ModSec-enabled infrastructure. In fact, I'm even on a dual call with the regulators now, where they're asking about, some of these technologies. So, the perversion of technology is also a problem. And then, of course, like I said, the informal system, which we cannot deny also plays a big role, especially in the financing of terrorism. I was recently in a training with the National Counter-Terrorism Center, and they showed a statistic, and I was wowed. And it said only 20% of the funds that are only 20% of the financing of terrorism goes through the formal sector. Only 20%. The remaining 80% is largely, through the informal sector. That's cash. There are some areas in this country where they still do trade by barter. You give a commodity, they call it FITO. You give commodity, the person gets another in return. There's smuggling. There is gold mine. So there is a huge risk, that sits outside in the informal system as well. But just to focus on my question, so those are some of the risks, and like I said, there are so many. Risks are always inexhaustive. But I'll just speak, I think I want to focus a little bit more on the controls. I've mentioned a few of the initiatives that the regulators have come up with in terms of putting together frameworks. Like I said, the BDC framework has come out, the agency backing framework has come out. There is even the sanctions compliance, which I believe Nigeria is trending very, very positively towards, which came out this year, which is making sure that people who have been identified as terrorists are completely and comprehensively excluded from the financial sector, just to make sure that, look, once we are trying to, the idea, I believe, is to make sure that if you are a propagator of terrorism financing, then you suffer the full extent of the law. Some of the things we can also do as financial institutions include, implementing very robust technological solutions. One of the things you see recently is, everybody's spending a lot on transaction monitoring solutions, due diligence solutions, transaction screening solutions. But where we need to go to is the era where we begin to connect these solutions. So you go to a typical financial institution and then they have a transaction monitoring solution. It may not even speak to the fraud monitoring solution. It may not even speak to the due diligence solution. But for you to have a full and robust AML program, you need everything to speak to each other. So you have onboarded a customer. He says, I live in Abuja. Your transaction monitoring solution should be able to tell you, look, this guy does more of his transactions in Lagos. And then that should be able to prompt you to say, sir, you said you live in Abuja. Your proof of address says you live in Abuja, but you are not doing most of your transactions in Abuja. How is that possible? And then he can tell you, oh, I go to Lagos for work, or oh, I moved to Lagos. And then that has progressed your due diligence, right? Even just from transaction monitoring. The same thing with your, other parts of your, so everything has to work together. So you might onboard somebody as low risk, but by the time you look at his transactions, or you look at the number of SCRs that are filed on him, or you look at the counterparties, that should feed into your risk assessment, and you should be able to say, look, based on behaviors around the customer, I do not believe that this customer still fits this profile. And then that then takes us to a dynamic customer risk assessment. So oftentimes you have you onboard somebody and then you risk rate him medium risk today, and then 4 years time he's still medium risk. Risk assessment should be extremely dynamic. I personally believe that you should be able to risk assessment should be so dynamic that you risk assess somebody today low risk, and tomorrow, if his behavior changes, you risk rate him medium risk, and if it changes again, you can risk rate him high risk next tomorrow, right? As long as you have proper audit log. So I think that's very important. Another area I think is very important is the aspect of the fintechs and the VASPs who are rallying up and really, really filling up a much needed space. There is a need for the robust compliance programs in all of those institutions. We have recently seen the CBN come with a hard stick on a few of them. But I think generally, proactively, there needs to be, I'm happy that I'm talking to, I believe a number of us will be compliance professionals, auditors, and what have you. I believe there is a need to raise the standard in this organization. With the release of the framework for VASPs, I believe there is now structure for how the VASP should work, and then there is very, very needed that they also adopt some of these things. Another thing which is very important is training. So this platform is a very, very good mitigant for AML CFT. There will be people who will come in who have not had new setting terms, or who will be able to take away something from here and then go on and speak at the organization. So another way financial institutions and then platforms like Probe Compliance can assist in the fight against money laundering and terrorism financing is providing platforms like this for people to talk about it. Oftentimes, crimes are always spoken about in hush words, quietly. But it's very important that we speak about this boldly. We talk about it. We make sure that everybody understands, that these are crimes. Oftentimes we think, oh, somebody is being sharp. These are not being sharp. Doing money laundering is not you being sharp. It's a criminal offense, and it's very important that we begin to look at it and treat it like as such. Thank you.
Thank you very much, Mr. Olabuke, for that insightful. And again, as per your last point, we need to consistently have these conversations, on a sustained basis, so that we can learn and, share best practices with each other. Again, please keep the questions coming. I saw a question on Very Dark Man and GTB. I don't know if the person is trying to set me up to, but yeah, you can please keep the questions coming. Use the Q&A section to drop your questions. So straight up, so Mr. Pius, what role does the CBN play in ensuring that financial institutions comply with money laundering regulations? How do they work with the in this regard?
Okay, thank you very much, and indeed the panelists as well as my distinguished participants. I'm sure a lot of people, or most of our participants here, are working in the finance industry, and they recognize the role of the CBN clearly. And the CBN is the regulator for banks, and it has a big role to play when it comes to implementation of the acts that are prohibiting both money laundering, terrorist financing, and of course, indeed, the recovery of proceeds of crime and stuff like that. So we are quite familiar with that. Therefore, the rule clearly are articulated. I want to try and articulate them around four pillars. Yeah. So I will look at it from the perspective of regulatory framework development. Clearly, the CBN, after getting the extracts or what the act says, what they do is to look at it very critically and then digest it. Therefore, at the end of the day, they extract those and create the AML CFT guidelines for banks, which of course must guide the way the banks must conduct the activities without breaching the dictates of the laws that they are particularly working to support. They also try as much as possible to develop or insist that banks come up with what they call the know your customer measures. Some of them include the customer due diligence as well as the enhanced due diligence measures. These are to guide the banks to ensure that in the course of your onboarding process, in the course of monitoring the transactions, maintaining the customer, you keep it to the regulations that the banks are meant to keep it to. So they ensure that regulatory framework development is done clearly. The second pillar would be around supervision and examination, beyond just giving them the guidelines and then ensuring that they put these measures in place, the KYC, the CDD, as well as the EDD measures. They go to physically, inspect. So they do some level of on-site inspection and sometimes also off-site monitoring, of course, with a view to ensuring that the banks are complying with the AML CFT, the letters of the law requirement clearly. They also take time to review suspicious transactions. Yes, they do. I know then we send a copy to, when we're doing it manually before technology took over, you must send a copy down to the NFIU and then you also send a copy to the CBN. But I thought we're sharing of information and that process is now seamless. But what exactly are we saying? They also do some proactive transactions review to be able to make sure that they nip the problem at the bud even before the regulator, the NFIU even comes in when they are chasing customers around or criminals around when they are doing the investigation. So they do a lot of on-site investigation as well. Then the third pillar would be around enforcement and sanctions. Of course, having said those two, you still are not complying. Of course, they have a big way. I know when Ola was speaking at that, sometimes the CBN wears the big hammer. They do that, yes. They can start with things as linear as fines. Sometimes they even take up your license if you don't do right. It is that bad. So I think something that banks should take very seriously, because the powers are there. The will to use it is also there. So don't think that, oh, don't worry, we'll settle them. If you don't do what you're supposed to do, it's likely that they will wear that power, and it might include things like license revocation. There was a microfinance bank I was working with some time ago. And sadly, their license was taken because they could not keep just records, because they've won them several times and they lost their license. It's gone. And others are getting new licenses, but an old one lost its own. So it can be that bad. Of course, they can also issue, things like documents like seize and there's others, or even mandate corrective actions for non-compliance. So the CBN has that power to do that. So they can also bear that significant power on banks if they are not complying, even though they support them, give them all the resources to be able to comply. But where all else has failed, they will not, for the sake of one bank, allow the entire financial system to go down the drain. So they do a lot of that. And to support the TRIA group, they also do a lot of training and awareness, because they know clearly that if they don't know, they don't know. So they support them. They continue to bring out the AML CFT training for banks so that they can update them with recent happenings, provide them with all the latest events, the regimes, especially across outside our jurisdictions, so they have a basis for transacting and knowing what obtains elsewhere. They also continue to use circulars, and advisories to make sure that they keep the banks up to date of emerging money laundering and terrorist financing risks, so that the banks are up to up to their standard. They continue to get the information that they require to drive compliance, because that is what is key. The entire enforcement of the AML CFT Act, of course, in terms of how it affects the financial institution, lies with the banks. And since the CBN, of course, is responsible for this level of supervision, then, of course, it is important that they work with the banks to ensure that the compliance is total. All right. Now, they don't do this alone. I mean, the Nigeria Financial Intelligence Unit, early days in the bank when Nigeria started under General Basajo's presidency, all sorts of bodies were created. So I remember I had a time we're sending reports to the CBN, we're sending to NFIU when they just came up. There was no clarity around. We're also sending to NDLE. Everybody was just demanding all kinds of distraction. But today we have one aggregate body that that coordinates all of these things. And as the man from our panelist from NFIU has said, Mr. Lamanti, clearly there's good coordination. So NFIU is clearly the financial intelligence unit that is responsible for takes care of these reports, and then they take time to analyze them with advanced tools, and then of course bring out insights and then disseminate this financial intelligence across board to relevant stakeholders. Now the CBN works closely with the NFI. That is very true. Now, in which ways they do this? It's a couple of ways, because in terms of reporting and information sharing, is very critical. The financial institution under CBN regulation must file STRs, basic. It's one of their requirements, and they must also send, what they call the CTR, which they call the currency transaction reports, which are threshold transactions, clearly to the NFI. And this is what forms the basis of those reviews that NFI conducts over time. And then, of course, brings out the intelligence or insights that are required. Okay, so the NFIU, of course, will analyze this report and then share it with the CBN again for those that concern the banks, and then EFCC for those that are within the jurisdiction of the SEC, and then, of course, other law enforcement agencies. All right. So reporting and sharing of information, that is one key area where they collaborate. So once you are sending your report, know that it's going to transverse across report. It's going to go straight to NFIU, and then when it is analyzed, it's going to also come back. The insight is going to come back to your supervisor if you're working for a bank or a financial institution. And of course, those who are in the non-DNFPPs, they of course, the SCOMO will also send those reports, and all of them will be analyzed and shared, intelligence shared accordingly. Another area is around joint investigation. I think joint investigation and compliance monitoring. So the CBN and NFI, they collaborate a lot in investigating suspicious transactions. Most times they send letters and ask the bank to place hold on certain accounts while they are conducting the investigation. So these are all with a view to helping them dig to the root, to be able to establish the root, how the monetary and how the entities, the beneficial owners and stuff with respect to investigation. They do a lot of collaboration in that area. The NFI also may also provide certain intelligence that lead to CBN enforcement action against some non-compliant banks. So if they come to your bank and they are investigating and see that you are not even meeting the policies, first of all, it starts with the AML CFT policy, and then you have been asked by the Apex Bank for you to develop your KYC, your CDD or EDD. You have even built the policy, because most of these policies are supposed to be approved by the board of the banks, which becomes your operational guidelines, and you are not even complying. Maybe after several cautions and stuff like that, they report you to the CBN, and of course CBN has the decision to sanction, penalties, or ultimately license revocation and stuff like that, depending on the complexity of such breaches and the frequency of such breaches. So they do that as well. Okay. Also, the third pillar in the area of collaboration, again, I can say policy coordination. Yes, both agencies work together to align. Definitely, they work together to align on AML CFT regulations. With international best practices. So, what are the other jurisdictions doing? Like Mr. Lamati said, the NFIU is a member of the prestigious Egmont Group. That is the group of financial intelligence units across the world. So they also compare notes. They share what are they doing that we are not doing. What are the things that are proving a challenge to us that others are doing the best. We try to also bring them. So in terms of policy coordination, they work perfectly together. Oh, we've been to the Egmont Group. This is an excerpt of what others are doing. How can you help us make the banks enforce it? So the CBN takes a look at it, and of course they review through a circular or through amendment or a rejoinder to certain circulars that have been sent out before. Just naturally updating the manuals and the AMS CFT manual for the banks to work with, thereby making it up to date and enforceable. Similarly, there is the area around sanctions and enforcement support. Yes, the CBN and the NFIU also work together in the area of sanctions and enforcement support. Sometimes the NFIU may also recommend sanctions based on financial intelligence, which the CBN can enforce. I mean, it's not mandatory, but they can enforce it. So if they visit your bank and then they find things that are not too wholesome and they believe that your bank is at danger to the overall financial system and anti-money laundering war, then of course there is basis for them to recommend you for sanction enforcement, and then CBN probably take time to get that enforcement done. So the CBN also relies on the NFI data, to identify high-risk customers or even sectors requiring stricter oversight. Today now there are a lot of rejoinders coming for cryptos, the relationship with banks and stuff like that. These are very high risk areas for banks right now because of the kind of woolly veil around crypto transactions. So the banks are already, being put under surveillance of how does the money eventually end up in banks and stuff like that. So there is a lot they do around that area. Therefore, there's a good working relationship, so to say, between the NFIU and the CBN. So I might just want to conclude to say that the CBN ensures compliance clearly through regulation, all right, and then supervision as well as penalties. Now, the NFIU on the other side provides a lot of financial intelligence to detect, prevent illicit, financial flows clearly. Now, their collaboration, of course, these two work together to ensure that Nigeria's AML CFT regime is strengthened, and of course ensuring that a more secure and transparent financial system is open to all, is not woolly, and ultimately make sure that we don't get sanctions as we're struggling to get out of the free listing. These two bodies must work together to ensure that we get to where we are going. So basically, I think the task is quite simple. We know clearly what the CBN does, and then what the NFIU does, and how both collaborate. I hope I've been able to put some context to the question that has been put to me. Thank you very much, sir.
Yes, you have, Mr. Pars. Thank you. Thank you very much for that elaborate explanation. So, Mr. Lamanti, I'll just, and again to my panelists, I'll just crave your indulgence that we reduce our contributions to 3 minutes, because we have, quite a number of questions. Again, we want to make this session interactive, so I want to be able to give enough time to address the questions that our audience have put in the Q&A. So I'll just crave your indulgence to limit our interventions to just 3 minutes. Mr. Lamanti, I'd like to push this question to you. So how effective is Nigeria's current AML CFT framework, in addressing emerging risks, such as digital currencies, fintech platforms, and online money transfers? I think Mr. Olagoke that spoke about, the emerging risks that we face. So it would be good for you to, share some insight very briefly. How is Nigeria? How effective is that framework in addressing this risks, and then what improvements can be made to keep up with evolving risks? 3 minutes, please.
Thank you once again. How effective is the AML framework? With the passage of the MLPPA to 2022, some provisions were made, especially in the area of beneficial ownership. But the key factor was the FATF recommendation 15, which specifically speaks to emerging technologies. This brought about the framework for countries to focus on AML CFT measures to mitigate the risk, especially when it comes to emerging technologies and non-face-to-face transactions. This was keyed into when we talk of the MLPPA, we talk of Section 4, which talks about customer due diligence. Section 3, reporting. There are a lot of risks, especially in the areas of kidnapping for ransom. We've had a lot of issues, well, when it comes to things like POS operators, especially even in Abuja. We had the case about 3 months or thereabouts, a POS operator around Kubwa axis, for those of us that are conversant with the locations in Abuja. Because of the CDD measures are a little bit relaxed, especially when it comes to non-face-to-face transactions. A lot of people that are involved in kidnapping use this loophole to commit all types of atrocities. Now, there are 3 key pillars that are associated with virtual assets and digital currencies. One, you can never overemphasize customer due diligence during the onboarding process. The second is risk categorization, and lastly, reporting. as a financial intelligence unit, we can't do anything when the relevant reports are not sent, be it foreign transaction reports, be it currency transaction reports or suspicious transaction reports. So in that area, the relevant financial institutions have that responsibility to conduct their due diligence. And when there's a change in the pattern of customer transactions, this should be reported to the Nigerian Financial Intelligence Unit, because a framework is as good as the people that implement it. You can have a very beautiful legislature, regulation, and all that, but when it comes to the implementation, if it is implemented poorly, definitely, all these threats cannot be tackled by either the NFIU or the relevant law enforcement. So yes, we have a very good AML CFT framework, but the implementation, a lot has to be done. Because for those of us that work in the financial industry, you'll notice that there's been an increase in cases of either fraud, kidnapping cases that these platforms have been used. There's a group that I'm part of, that some chief compliance officers on a daily basis, what is posted on that group is either somebody's account has been hacked, or these platforms are used to perpetrate different types of criminal activities. And to now track the beneficiary is quite difficult, because now it's very easy for you to open an account, be it things like OPay and all these other platforms, unlike the conventional banking system that certain documentation must be provided before you can have access to financial services. So what improvements can be made? Well, I think it's training, because
in just sorry, Mr. Lamar, in just 1 minute so that we can round up. Thank you.
Okay. Because the speed at which technology is moving, we're always playing catch up. So there is need for us to always train and retrain. And a lot of problems that we have, even when we send intelligence packages to law enforcement agents, you have to sit down and explain to them the transaction dynamics, because they are used to the conventional banking transactions. So they that are supposed to investigate these cases are not very conversant on how digital currencies, fintechs, and online transactions occur. So that's a very big improvement that has to be done to sensitize our law enforcement agents. Thank you.
Okay, thank you very much, Mr. Lamanti. I mean, you highlighted the importance of using tech. I mean, tech can, fight some of these challenges, but also, again, consistent capacity building, similar to what Mr. Olagoke said. I would just like to before I call in Yetunde to respond to data privacy issues, I'd like to call in Mr. Oluwanifemi Akinyemi. Just share with us how can financial institutions ensure that their staff and compliance teams are adequately trained to recognize suspicious activities, especially in the face of new technological developments. Mr. Oluwanifemi.
Thank you. Good morning. Thank you very much for the opportunity. Technology is no longer a luxury; is a necessity. So the way these money launderers do things right now is becoming more sophisticated, and we might not be able to actually track all these things manually as it's done. So that means that through technology, we'll be able to run through a lot of data, a lot of big data and big data analytics, and which might not be, which we might not be able to do manually. Also, gone are the days of onboarding the customers and just taking boxes, just fill account opening forms, and that's it all. Gone are those days. These days right now, we need to a more robust customer onboarding system, and also verification, because it's not only, like I tell some of my colleagues, it's not only taking documents, it's about verifying these documents, because a lot of these documents are not even valid. So how do we verify all these documents? It's through technology. We use technology for most of all these things. And there was a case of yesterday. There was a case of a customer that we ran a sanction screening on, and we discovered that this customer had a name similar to someone that already been convicted of convicted by the EFCC, and what we did was dig deep and we discovered that it's just a name similarity. And if there are no technologies to do this, we wouldn't have been able to achieve that. So also we are operating in an increasingly interconnected world through the internet. So that means our compliance effort too must reflect that. That means there must be interconnectivity. So these days we have cross-border transactions, and how do we do these things? How do we track all these things? You can't do them manually. So it's something you have to do with technology. Also, the regulatory landscape too will continue to evolve and strengthen. Be strengthening. Already seen recent legislative updates. There are different legislative updates, and this term will likely continue to address emerging risks. So, particularly in areas like virtual assets and rapidly growing fintech space. See, these days now, fintechs are growing, and so now, what should we be prepared for as stakeholders? So we need to embrace technology, like I've said earlier. Then we have to strengthen our data management system. Our data management system that's robust data is very, very key to actually tracking all these things. So we have to prioritize continuous training. So it's not only training and making sure that the people we are training actually understand what they are being trained on. Then we also have to enhance our KYC and CDD processes. So like I said earlier, the days of ticking boxes is over. That means these days we have to do customers due diligence, enhance due diligence also for the high risk customers. And how do you do all these things? They are through technology systems. Run background checks on these customers to be able to determine what they are doing, and also to determine the trend of their transaction pattern. Also, we have to foster collaboration. So we engage regulatory bodies also, and industry peers too. So we have to talk to our industry peers too, and we have to stay agile. That will keep. We have to be informed about the ever-changing regulatory landscape. So this is just a summary of what I thank you.
Thank you so much. Thank you very much, Mr. Olu, for that, providing that insight. Yetunde, I'd just like to hear your thoughts. I know you spoke about it earlier with respect to clients, lawyer privileges. So in your view, what are the key challenges when it comes to data privacy and sharing, data sharing between financial institutions and government agencies like the NFIU, and how can this be addressed while ensuring compliance?
Okay, thanks very much, Shino. Yes, as I've mentioned, I'll try to, just start from the build it up, the building blocks. As we know, our Nigerian Constitution, 1999, assures some form of, privacy for citizens. Sorry, the screen keeps changing. That's the section 37. So that's the right to privacy. That is, a fundamental human right, as it were. Obviously, we need to balance that against the need for, transactions, contractual transactions, and of course, on the public institutions side, government agencies enforcing the rules and also prosecuting maybe criminal justice or public policy or national security, for instance. And so that's where the Nigerian data protection regime comes in. We have quite a robust data protection regime for personal data, for the sharing and processing of personal data. We have an act called the NDPA, that's the Nigerian Data Protection Act, that came in 2023. Before that, we had a regulation, that the NDPR, but the act is now in place. And that act, provides, guidelines, etc., as to how personal data is going to be processed and exchanged between maybe private institutions, public institutions, and a mix of that. It's important to know that, this act, Section 3 of the act, does provide some exemptions in terms of its applicability, which, would include situations of national security, for instance, the prosecution of criminal justice, health, emergencies, etc. Now, that kind of brought a bit of concern that, okay, because prior to, and I mentioned the NDPR, right? Those are the regulations prior to the act. There were implementation frameworks that were brought out subsequent to the regulation that dealt with, private institutions, public institutions. So, for example, the NFIU would fall under the public institution, and they were, and in my opinion, continue to be subject to these types of the data protection regime. So, pursuant to the Act, there's now what we call the GAID. It's a General Application and Implementation Directive that just came out this year, also from the commission that is responsible for data protection, called the NDPC. So that's the Data Protection Commission. The GAID provided quite a bit of insight and clarification into areas that, the Act wasn't very clear. So when it comes to the prosecution of, let's say, crime, for instance, or protection of national security, the GAID has made it very clear that even though this public entities or government agencies that are, trying to, prevent crime or, persecute crime, such as the NFIU, are exempt, as it were, from the strict data protection regime. The GAID made it very clear that no, the exemption is not a coverall. They must still stick to the principles of data processing and data protection and be guided by, the regulatory regime in place. I'll try to go very quickly through the principles because I know we do not have a lot of time. And also there's what we call the lawful basis or legal basis of processing data. Now, data processing could be, recording, sending, deleting, storing, etc. So it's a wide range of activity. So just to give background on that. Now, the lawful bases include consent. It could be for the performance of a contract, for instance. It could be for the protection of the data subject's vital interest. It could be, for protection of a legitimate interest of maybe the processor, for instance. So there are many, well, not many, but quite a number of the bases, lawful bases. So obviously, even if, for example, the NFIU is processing this data for the pursuit of, criminal justice, they must ensure that at least one or a combination of those bases still exist before they can store, process, data. Now, in terms of the challenges, obviously, the financial institutions are very concerned about protecting, private information about their clients, customers, etc. But of course, they must adhere to the extant law. So what's important, of course, is for both sides to fulfill their obligations, as it were, in terms of what the data protection regime or privacy regime dictates in Nigeria now. And that includes ensuring the security of the data. So they're what we call the principles of data, processing data. So, there's what we call minimization. We know that there's a lot of huge data sets being shared and across, for reporting purposes, etc. And also the data is going to be processed even more by the regulators. So things like minimization, which is, just collect the data you need. Don't over collect. And of course, ensuring that the collection process is transparent, the data collected is accurate, storage obligations. You need to store, there are many regulations that say, okay, you can keep this particular type of data for this particular amount of time, respecting that. And of course, cybersecurity, security of the data, trying to, at least minimize threats, cybersecurity threats, data breaches, being able to report those types of breaches on time if they do occur. And this also applies to public institutions and not just private institutions. And basically awareness training of what, it looks like to have a robust and implementable data protection regime within each of these organizations. So the NDPC is quite alive to this, their duties, and are, they've kind of put in an interesting mix, what we call data protection compliance organizations. So these are like organizations that are versed and experienced in this types of protection and compliance activities to conduct things like annual audits, look at policies, ensure that companies and institutions have policies, that they're trained and made aware of, what is required to ensure that, there's a lawful processing and there's the principles of data protection adhered to. So DPCOs, I'm an active, participant in one of the registered DPCOs. So we're quite involved in that. And also all institutions, especially public institutions, must also have data protection officers within their organizations to ensure that, institution-wide, there's constant training, constant awareness, and there's evolving compliance. As one of esteemed panelists have mentioned, the Commission is also very aware of emerging technologies, because when we look at financial institutions, banks and OFIs, virtual assets, etc., have become the order of the day and very popular. So in terms of compliance obligations, they're keeping, abreast of this and ensuring that, the regulator keeps up with, the very fast trend of evolution of technology and financial solutions, etc. I like what somebody also said about, full collaboration and integration of all the stakeholders and key players, because, data protection, AML, CFT, compliance really, as in regulatory compliance really, is multifaceted, and it would be very ideal to have, collaboration from all these areas to ensure, integration and an optimal regulatory framework and implementation, as it were. There's still so much to say, but I know I have very limited time. But those are, the key things that we would look at, in terms of looking at the challenges, coming up with solutions, and just ensuring that people's data subjects, information is kept, is protected and kept private as much as possible, of course, balancing that against the need to comply with different regulations and the need to even conduct business, as it were. Thank you.
Thank you very much, Yetunde, for the really insightful contribution that you have made to this conversation. So I'd just like to, Again, we're about to, end this question. I mean, the panelists, the panelists, and then we'll have a section. But before I do that, I'd like to ask Mr. Lamanti. So financial crimes are becoming, more like increasingly cross-border, right? So how can Nigeria enhance intelligence sharing and cooperation with international financial watchdogs? Do you also want to share what currently exists, and how can we enhance this? Just very briefly, if you can do it in 2 minutes, I'd appreciate it.
Okay, thank you very much. Well, the key stakeholders that the NFIU works with, first of all, definitely we have the Financial Action Task Force. That's the global trendsetter when it comes to AML CFT. We also have the Intergovernmental Action Group, commonly known as GIABA, and the NFI is also a member of the EMON group of FIUs. Apart from that, we sign MOUs with other stakeholders because there are certain countries that are not in the EMON group of FIUs. I think last week we signed an MOU with El Salvador. So this facilitates information sharing and also intelligence gathering. The way it works, the EMON secure web, it's like a mail service. So we can request for information from other financial intelligence units, and they can also request for intelligence from us. So we try to avoid all the red tape, because the normal process is definitely you go through the Ministry of Foreign Affairs here, which will now write a letter to their government and all that. But just the EMON Secure Web allows you to just a simple one-page request form. So you key in the information, maybe even if it's a Nigerian national, maybe in the US or whatever country. So you can now key in the information. If you have any identifier, like maybe telephone number, or maybe if you have the account details of the person, you put that in, then you now send it to the receiving FIU. You can get different types of information. You can get property records. You can get assets, because in Nigeria the norm is once people are involved in any corrupt practice, the money is normally shipped out of the country. So this is a way that we can easily track with the assets that are tied to the subject in question. Also, with the GIABA partners, they conduct mutual evaluation for all the FIUs. Like, GIABA is basically an FATF style regional body. Because because of the reach, every region has its own style FATF group, because of the peculiarity. Like in Africa, our major problem is corruption and maybe financial crimes. So Latin America, their own style regional body, majorly will focus on maybe issues of drugs and whatever predicate offense is peculiar to them. The Middle East, just like that. So information exchange and training is very, very key, that we engage with our foreign partners. And also, we also request for information, and sometimes we do joint intelligence or investigation with them. So these are some of the ways that we try and combat financial crime and also money laundering by sharing information with our relevant stakeholders. The EMON group has always been very, very, very important in the AML CFT fight in Nigeria. So these are some of the foreign partners that we engage with, and even even Interpol. We also cooperate with Interpol through the Nigerian office here, as under the IG's office in Force headquarters.
Okay.
Issue, if we have maybe if somebody is wanted, you can issue a red notice that they will now circulate to all the other formations around the world. So these are just to mention a few of the ways we can collaborate with our international partners. Thank you.
Okay, thank you so much, Mr. Lamanti. And finally, I would just like to call Mr. Oluwanifemi to just share with us, what is the future of AML CFT compliance in Nigeria? And in your opinion, what are the most, what are some of the most promising advancements or strategies that stakeholders should be prepared for in the coming years? Again, throughout this conversation, we've highlighted the fact that it's like a moving target. Things change quite often. So what are some of the promising advancements or strategies that all stakeholders should be prepared for in the coming years? Mr. Oluwanifemi.
Thank you very much. Firstly, like I said, technology is something that we need to embrace. It's becoming a integral part of AML CFT framework. For example, transaction monitoring. For example, in achieving suspicious transactions. Sometimes we might not be able to track the patterns that customers transact manually, and technology will do this in a very, very easy way. And technology will also go through data, a lot of data within seconds. Data that manually to take time to do. Technology will go through them very well. So we need to embrace technology. And also another advancement is that we need to strengthen our data management. Like I said, it's because most of all these things will depend on how good, how robust our data management is. And also, like I've said earlier, training is very important. That's training. And also, we need to also, another advancement is we need to also be prepared to make customer due diligence, KYC process, that's know your customer processes, are more robust too, because it's beyond filling paper, it's beyond dropping documents. Verifications has to be done, and you can't just be traveling everywhere. Sometimes too, you can't be traveling to customers' addresses to verify. So technology will do this, and these are some of the advancements, advancements that we should prepare for, that stakeholders should prepare for in the coming years. Thank you.
Okay, thank you very much. Mr. Olagoke, I'd just like you to also jump in on the conversation with respect to the role, international bodies like FATF play in shaping Nigeria's AML CFT compliance framework, and how does Nigeria align with international best practices in this regard?
Okay, thank you, Mr. Shino. I would say FATF plays a supersized influence anywhere around the world. When you are talking about AML CFT, they are the global watchdog, and they set recommendations. And I say this with my hands up, because the recommendations they are not really yes, they are recommendations, but they are basically telling you that you should or you must do this, right? And if you don't do it well, then you may be placed on the gray list or the blacklist, right? So absolutely, the FATF plays a very phenomenal and integral role in the fight against AML, in fight against money laundering in Nigeria. In terms of how they have shaped our framework, I would say they have played 150%. Largely, if you look at our policies, if you look at our regulations, between 2022 to date, you'll notice that a number of our key anti-money laundering and CFT acts or laws and regulations have changed. We have the MLPPA, which was previously the MLPA. We have the TPPA. We had POCA, which then dropped down, which then, cascaded into the SCUMO regulation, the CBN, SEC, and all those sectorial regulations. So it has been phenomenal. And I would say that, getting gray listed, and I'm sure a number of us are aware that we got gray listed sometime in 2023. That has also shaped our compliance framework, because it has put us, I would say previously we may have been a bit relaxed, but that has now supercharged everybody. Kudos to organizations like the NFIU. Mr. Lementi, who is here, I was recently at the NFIU office yesterday, and everybody is on their toes. Everybody is talking about AML, CFT. Everybody is amped up, and then you can see the advisories have gone out, from NFIU and all these other bodies. So the FATF by its actions and by its recommendations is playing a very, very huge role in Nigeria's compliance framework. And in terms of our alignment as a country with international best practice, in this scenario, I'll just, when we say international best practice, I'll just kind of ring fence it here around the FATF recommendations, even though there are other, AML, CFT best practices like Wolfsberg, there's Basel, there's UNODC and so many other, AML, the AML directive in the EU and all that, but I'll just speak to FATF here. In terms of how well we are aligning, I know as at 2024, in November 2024, in the last report, I think we had about 4 deficiencies left in terms of, the things we're not meeting up, we're not complying with from a technical compliance perspective. Just for those who are not very familiar with the term, when the FATF comes to your country and does a mutual evaluation, which is a test of the sufficiency and robustness of your AML CFT framework, that's laws and implementation, they look at it in 2 phases, the technical and the effectiveness. So in terms of technical, largely, and I'm sure a number of us are aware, our laws are robust, our regulations are robust. We have very, very rich regulations. So we only have about 4, which are even just, it's not that we are non-compliant, we are just partially compliant, I believe, and most of them were centered around the DNFBPs. But if you look at our technical, if you look at our effectiveness compliance, then you then begin to see a lot of gaps, right? Which I believe that are being worked on. For example, again, we still go back to the DNFBPs. There's the entire issue about how can we enforce, how can we monitor and enforce the DNFBP, right? Remember at the earlier point I spoke about the informal sector. The DNFBP, that's designated non-financial business and professions. A lot of us like to believe they are all formal, offices. You go into an office, you see a construction company, but that's not true. There are a large portion of the DNFBP industry are largely informal. And I was recently in an event with the new director of SCUMO, Mr. Harry, and he was explaining about the issues they have in terms of the absolute width of DNFBPs. You cannot imagine the number of DNFBPs. A lot of them operating outside, the regulation. So, as we continue to progress, hopefully that will be solved. I do believe that if we can adopt what is happening in the UK, for example, where they use SROs, that's self-regulatory organizations, self-regulatory organizations in Nigeria, for example, like the MBA, who monitors legal firms, and ICANN, who monitors accountants. If you can have that replicated across all the DNFBPs, that might help. And just to kind of finalize, generally, I believe that Nigeria we are supposed to do another evaluation in 2025, and then which will now tell us whether we'll be getting off the grey list. So I am hopeful that Nigeria will get off the grey list, and I believe that going forward, And with the recent actions that I have seen, over 2023, 2024, and now, I do believe that we are strongly aligned with international best practices. However, there is also room for improvement, as any other program in the world. Thank you.
Thank you very much, Mr. Olagoke. And on that note, I'd like to thank everyone, all my panelists. I believe they deserve a round of applause for doing an amazing job in responding to the questions, providing perspectives, and making recommendations on this very important topic. So I think we can just go straight to the questions. And again, thank you so much thank you very much to the audience. You have given us 2 hours of your time. It's been very engaging. So there are lots of questions here. So I will just read it out, and I'm sure some of them are directed at, so I'll just go straight into it. So this question goes to Mr. Lamanti. It's from Kelly. So Kelly says, it's a known fact that finance companies, as part of their AML mandates, required to file STR. Now, this finance companies receive inflows through existing commercial banks. The banks also file and report CTR or STR thresholds to NFIU. Since the banks file this return, why do FC still need to file the same return, since what the FC is filing is basically the same thing that the bank would have filed? So, Mr. Lamanti, just very quickly, do you want to provide a response to this?
Okay, thank you very much. The reason why they should report is because the transactions are conducted on behalf of their customers. The bank might report it, but they don't have enough information. Once the customer is for that company, you have the responsibility to file that report, because the information on the customer that the bank might have might not be very exhaustive. So you, as the person, or even when the bank files, they might file the report as the finance company conducting the transaction. But if the finance company is reporting that transaction, they'll report it in that customer's name. So that's the difference, because when we're doing our analysis now, let me just use UBA for example. UBA might file a report that XYZ finance company conducted a transaction. But when the XYZ finance company is now filing a report to the NFIU, it will now say Mr. Lamanti conducted a transaction with our finance company. So you can see now, from the perspective of the bank, when we're doing our own analysis, we won't have the information on the beneficial owner of those funds. So that's the reason why finance company is required to file that report.
Okay. Okay, thank you very much, Mr. Lamanti. There's a question here from Isaiah that says, please, how do we relate the recent development regarding GTB, Very Dark Man, and EFCC saga vis-a-vis the expected collabo between banks and the regulators? I don't know who wants to take, the question isn't really clear, so perhaps maybe Isaiah wants to make it clearer. What exactly are you asking? There's another question for NFIU, but who wants to take that?
Based on the interaction I've had with people in the commission, they're saying that what they are arrested him for is not related to the GTB issue. So, but I think before we'll get clarity when they read the charges, then we'll now know what exactly they're charging him for. They said he was under surveillance and they happened to just arrest him there. So by the time we now the charges are read out in court, we'll now know exactly what the issue is, because they said that they have multiple petitions against him relating to some financial dealings. So by the time the charges are read in court, I think it will be clearer on what actually transpired in that. So.
Okay, thank you, Mr. Lamanti. There's another question for you, but before I take that one, I'd like Mr. Oluwanifemi to take this question. When can one classify a customer as high risk, and what further steps can be taken to manage this type of customer? So Austin Akata is asking that when do you classify a customer as high risk, and what further steps can be taken to manage this type of customer?
Yeah, is that for me?
Yes, yes.
Okay. Classification of customers can be in different forms. I mean, like I said, we have low, medium, high. So when you classify a customer high risk, most times there are customers like customers that are involved in real estates, customers that are also politically exposed people, persons, politically exposed persons. That's the PEPs. So PEPs are people that are in the corridors of power, or probably they have relatives to the corridors of power. So also charity organizations. Charity organizations to take donations from different places. It's also an high risk customer. So customers that these are most of the customers that are in these categories, maybe casinos, or customers that are involved in betting. So some of these customers can be used. Some of them can be used to launder money if care is not taken. And when you have these customers, you have to perform an enhanced due diligence of them after you have done the normal customer due diligence, and then you continue to monitor as an ongoing monitoring of them. So I hope that answers the question.
Yeah, yes, I think it has. There's a question for Alex Samuel to respond to. Is from Jafar. It says, how do financial institutions get these dedicated tools for suspicious transactions and suspicious activity tracking? Do you want to take a look at that question, Samuel?
Yeah, sure. So that's pretty much ties into the space that we're in. So probe compliance, we're a technology company. We provide tools and services that can help financial institutions and DNFBPS, in the global fight against money laundering and financial terrorism. So we have a range of tools, like Mr. Olagoke, I think, mentioned earlier on, comprehensive end-to-end. That's one of the main pain points that some of our prospective clients they face, is that they don't want a situation where they have this tool with this organization and this tool with this organization. So we try to build a comprehensive end-to-end suite of tools that handle the entire chain. So our two pillars platforms that we have is Probe Core and Probe Transaction Monitoring. So the Probe Core application is a customer due diligence, AI-powered customer due diligence platform. So it handles things like KYC, KYB, NIN, BVN verification, TIN verification, things like that. We also have the customer screening, sanction screening aspect as well. We've tied in, OFAC, NIGSAC, all the foreign and domestic sanctioning bodies into it to be able to do those checks. We also have adverse media screening, real time, connects to the internet, grabs, searches, news articles, and online documents, social media, things like that for any adverse media regarding any particular subject. PEP identification, AI powered as well. So being able to, we're building a very robust PEP database of in the continent, covering the whole continent. So things like images, like biodata, political positions, relative and close associates, everything in just one place. Regulatory reporting, I think that's an issue, that's a pain point that a lot of people have as well too. So we've tried to make it as seamless as possible. All the reporting, GoML, CTR, SAR, STR, NICOM, SEC, PEP reports, everything in just one place, and it's a single sign-on dashboard, and you can also use the API to connect. We also have a transaction monitoring as well, which handles transaction monitoring, payment screening, regulatory reporting, things of that nature. We have Probe Exchange for BDCs, the Bureau de Change markets. We have Probe On Demand, which is a screening as a service. We also have Probe On Chain, targeted at the crypto blockchain space, being able to detect if cryptocurrency wallets have been sanctioned and things of that nature. And then to bridge the knowledge gap, we have a program where we train people, about new regulatory changes, new compliance changes, and things of that nature. So if you're interested in a demo with Probe Compliance, if you check the chat, I'm sure you'll see a link. Someone should have dropped a link to book a demo, and you can just go ahead, book a demo, set a date, and we'll be very happy to demonstrate our tools and technologies to you. Thank you very much.
Thank you very much, Mr. Samuel. Mr. Cheka, there's a question here from Oluwaseun Akinde. It says, given that corporate registrations with the CAC in Nigeria often include broad and sometimes non-reflective business objects in their MEMAT, how can financial institutions enhance their due diligence processes to accurately understand a customer's true operational activities and ensure alignment with their stated business purpose, rather than just relying on the available information on the documents collected? Do we think there can be a control around this to ensure transparency in business operations in Nigeria? Mr. Cheka, did you get that?
Yes. Yeah. Thank you, Oluwaseun Akinde. Now, one thing is to get the customer's documents and onboard the customer, verify the documents and onboard the customer. The next thing is to understand the customer's business. And that's why, as a relationship manager, as an account officer, you must not just know the customer. You are expected to know the customer's customers. Who is the customer transacting with? Is this customer's business in line with what he said he's into? It's very, very important and is key. Because if the customer's transaction pattern is not in line with the kind of business he said he is into, then automatically it's a red flag. So it's important that outside what is contained on the MEMAT, if a customer is into maybe a designated non-financial business, that one is supposed to be regulated by SCUMO, but by the MEMAT, it's not regulated. By the MEMAT, those things are not there. Maybe it's into construction, and on the MEMAT, you can't see construction there, but it's doing contracts. What are you supposed to do? You're supposed to inform the customer. Based on your business activity, you are supposed to provide this additional documentation, right? And if you also find out that the customer is in line with businesses that doing businesses not in line with what he said, the bank has the right to list the transaction, to block the account until the customer provides evidence that this transaction that he's doing are genuine. And that's why we have right to report suspicious transactions not in line with customers' activity. And it's also important to note that all account officers are responsible for whatever comes out from activities of their customers. And that's why training is important. So if a customer is involved with one transaction or the other, you are responsible because you're the first line that you've invited. If the AFCC is inviting the bank, you're the one that will represent the bank. So account officers or relationship managers have a serious role outside compliance to ensure that they report activities of the customers when they find out they're not in line with what the customer is doing. And you can either ask the customer to obtain additional documentation if by law is requested to do that, is obligated to do that, or you have the right to end a business transaction with a customer if a customer is going to put you into serious trouble. Thank you.
Thank you so much, Mr. Cheka, for that response. So, Mr. Lamanti, there's a question here for you that talks about, so what's the current status of Nigeria as regards the FATF grey list? Do you want to just provide a brief update on that?
The current status, we're still going to get evaluated this year. It was scheduled for June, but I'm not sure if it's still going to hold that June. There are certain criteria that was given to Nigeria where putting things in order, especially when it regards to quality of suspicious transaction reports that are filed by reporting entities. And also another thing is feedback that's given by law enforcement. Because what they actually want to see is not only that you're filing reports, but the reports that are filed by the banks, when they are analyzed by the NFIU, does it result into a conviction or seizures? So that information, there's no correlation because everybody wants to protect his own space. So most times when we send out these intelligence reports, there's a feedback form that the law enforcement agents are supposed to fill it and give it back to us. So Most times when it comes to the direct relationship between, okay, if you say you file 2,000 suspicious transaction reports, and at the end of the day, you can only tie those 2,000 reports to 2 convictions. That means it's not, you're not, the AML CFT regime in Nigeria is not effective. So those are some of the issues that we're trying to put in place. And also the quality of suspicious transaction, because there's a direct correlation between the quality of reports that are filed to the NFIU and the quality of intelligence that is sent out. Because most times you find out that you get a suspicious transaction report after working on it for 1 week, you now find out that you've hit a dead end. So at the end of the day, you keep on analyzing reports that are not qualitative at all. So those are some of the issues that we have, but before the end of the year, we're going to get evaluated. So if everything goes according to plan, we hope that before the end of the year, Nigeria will exit the grey list. But we still have a lot of, we've been working tirelessly with SCUMO also, especially in the DNFBP space. That's another area that we always have issues with when they come for evaluation. We've gone for joint examination. I was in Sokoto and Maiduguri with the SCUMO team, especially when it comes to targeted financial sanctions. Most DNFVPs don't know what it is. They are not registered on the site, and they don't do their profiling. So those are some of the when it comes to our act and our regulation, everything has been updated, but it's now efficiency. That's where we really have that problem, and that's why we're trying to work with our stakeholders to ensure that all these loose ends are tidied up before they come. Thank you.
Okay, thank you very much. There's a feedback here from Yomex with respect to the process of rendering the CTR through Go AML platform. He made reference to their WhatsApp group that comprises of 400 members, and that nobody can boldly CTR successfully through the XML format. So it's just that your NFI should do something about it. I'd like to bring in Yetunde to respond to this. So why should only financial institutions be held responsible for money laundering issues? I don't think it's only financial institutions. How can the regulatory agencies reduce such burden away of money laundering away from commercial banks? Can CBN, NFIU, and other regulatory agencies include affidavit to basic requirements to account opening forms? This affidavit that is so this affidavit, either for a personal account or a company, will not be used for any form of money laundering activities. CAC to keep collaborating with the NFIU, EFCC. So yesterday, do you want to take on this question?
I'll try. I'll try.
Okay.
So, I mean, as you've said already, Shino, it's definitely not just financial institutions that are obligated to adhere to the AML CFT framework. As we've mentioned many times during this presentation, there's a framework for financial institutions. There's a framework for non-financial institutions and professionals, businesses and professionals. There's a framework for different what should we call it, players within the economy, the sector, what should we call it now, insurance companies, capital market operators. I mean, just name it. There's a regulation and obligation. I think, financial institutions are just brought to the fore because, everybody needs a bank account. Everybody, it's the obvious funnel for, funds, for remittance, transfer, etc. Yeah. That's the obvious, medium. And that's why it's kind of brought to the fore. So definitely it's not just financial institutions. I hope that clears that. I'm not quite sure what you mean about using an affidavit to cover all needs. As you know, I don't know if you're a lawyer, but I mean, as a lawyer, I'm not afraid to admit that, sometimes people swear affidavits and they're not even at the court to do that, which is, so how reliable is that document? And what is that document saying? It can't cover all, and it definitely cannot cover future occurrences, even if it, let's say, covers the present in terms of, oh, right now I'm compliant, I don't participate in activities that would fall under all these obligations, etc., which it's just not something that is fit for purpose and would be sufficient, because there's constant monitoring apart from what you have initially submitted or during onboarding, and so it's continuous. Your status may change, you may become a politically exposed person. It's just too wide to try to narrow down to some documents that you purportedly signed in court under oath. I can't remember if there's any other angle to that question.
That's all you've covered it. Thank you, Mr. Olago. Okay, so there's a question here from Sean Akinde for you. It says, what responsibilities do foreign fintech companies with predominantly Nigerian customer bases but operating under foreign licenses, what responsibilities do they have in supporting Nigeria's effort to exit the FATF grey list?
Okay, thank you, Mr. Shino, and that's an excellent question. So I think just to dimension that question, there are two aspects here. A foreign fintech operating with Nigerian customers that is licensed and authorized to operate in Nigeria, of course, it will have to get the approval of the CBN. So even if a IMTO, for example, that is licensed in the UK wants to provide remittances into Nigeria, typically it will have to be approved by the CBN to provide those remittance services into Nigeria. So obviously, for it to be approved by the CBN, it has to go through, it has to align with our regulatory framework, the CBN regulations, every other regulation and laws. However, where it is an entity that is operating illegally, and then we do see pockets of those kind of entities here and there, it is still required to align. However, it might not be obliged to align with our Nigerian regulatory framework because it's not monitored. But remember that for any entity, any fintech, and again, remember at the beginning I said I will not call any institution that doesn't have a license a financial institution. So if you say fintech, I'm assuming it is licensed. It might not be licensed in Nigeria, but it's licensed somewhere else. If it's licensed somewhere else, then it's under the regulatory framework of that country. So if a fintech is operating or has a license in the UK, then it will align with the UK laws and regulation. However, if it is not approved to operate in Nigeria, then there is a discord. Why? For example, the due diligence requirement in the UK is that you must identify all beneficial owners that have 25% and above. But in Nigeria, we say 5% and above. So if that person is to operate in Nigeria, then there is a regulatory arbitrage there because they will not be compliant with our Nigerian regulation. So again, that goes back to the risk I mentioned before. We must make sure that everybody is adequately supervised so that we don't have this kind of regulatory arbitrage. So yes, regardless, if a foreign financial institution is operating in Nigeria, it must comply with the letter and spirit of our regulations and law. And one of the ways they can do that is by, maybe having resources on ground to ensure that they comply, and of course, having the appropriate technology, like maybe proof compliance to help them with their implementation. Thank you.
Thank you very much, Mr. Olagoke. Yetunde, there's a question here, but I suspect that you may not be able to answer, but let me just read it. It says most cases of money laundering in the public domain are charged against politically exposed persons. In most cases, lawyers defending the suspects get into all forms of tricks in order to delay the case. How can this be curtailed in the criminal justice system? To be fair, I don't think Yetunde has the answer. Or Yetunde, do you want to attempt?
You are correct. I don't have the answer to that. I'm not even sure I'm clear if it's a question or a statement, to be very honest. I'm not sure. Yeah. Well, let's pass. Yeah. Let's pass on that.
Yeah. I think it's a combination of both. But yes, you're correct. We will pass on that. Anthony Okpa is saying that KYC is a vital aspect of account opening in the financial institutions. So how does one mitigate the risk involved as per accounts opened online and through bank POS agents which has been on the increase. Does any one of the panelists wants to take a go at this question?
Yeah, let me take a stab at it. Can anyone hear me, please?
Yes, we can. Please proceed.
Okay, great. So I think the first thing we must understand is that account opening in the branch or in a physical location in a financial institution should have the same standard as an account opened non-face-to-face. So I'm sure a number of us are aware the FATF recently came out and said, non-face-to-face account opening is no longer by default high risk. They said, I think they released that in February or March. So they said account opening through non-face-to-face channels, which would be, like the question asked, mobile apps, web platforms, agents, is no longer by default high risk, provided you put in place the appropriate risk mitigation. Now, when that declaration came out, I don't believe any compliance officer was surprised, right? Because there's nothing that can be by default high risk when you have put in place risk mitigation. Is basic risk 101. So what am I saying? I am saying that there is we cannot say agent banking onboarding is high risk by default. What we should actually be saying is how can we create controls into those onboarding flows to make sure that those onboardings are no longer high risk. I give you an example. The mobile apps. What's the difference between when you open an account on the mobile app and when you go into a branch? The difference is that somebody can see you, right? But you can also have that on the app. You can have liveliness checks. You can have biometric scans. Biometric scans have really progressed. Over the years, there's fingerprints, there's retina scans. There's facial recognition. So many things. So you could put those in place, and then you could also put limits. So you can say, for example, we will not open a tier 3 account. We will only open a tier 1 account on a digital channel. So there are so many innovative and intuitive ways you can put in controls on those features, right? And I believe, and I've also heard authoritatively that very soon the eKYC regulation should come out, and I believe that will kind of provide a lot of standardization across the industry. So just to finalize on this question, I do not believe that any particular point of account opening is it's after you have put in controls will just remain risky. If you put in place the necessary controls, you put in place the necessary monitorings, then you can bring it within a reasonable risk appetite within which you can eliminate a lot of the money laundering and terrorism financing risk inherent.
Okay.
Thank you.
Thank you, Mr. Olagoke. Mr. Obina, I'd like you to respond to this question. It says, what is the role of the internal control in ensuring, I'm assuming internal control officer or office, in ensuring compliance and AML CFT in the banking sector?
Okay, thank you very much. Of course, usually we would have said that internal control is a system, it's a process, but since it has been reduced to a department, most organizations, especially banks and neobanks, financial institutions, have internal control processes that look at operational practices, policies, ensuring that adherence are made or are followed as far as the policies in place are organizations are put in place, and to ensure that the guidelines as laid out by the organization are not violated or activities carried out are not in line with how it is done. So bringing it to that perspective, it means that internal control will also check to ensure that all compliance issues in collaboration with compliance team or compliance issues required are adhered to, not to wait until it passes there. Since internal control function is a second line of defense, my advocate would have been that the control section should have been moved to the first line of defense so that the control will be started from the first line. But for internal control department, it ensures that all requirements, standard practice requirements, standard expectations for every onboarding are not violated or are not disregarded or waived as much as possible. That is basically what the functions are there. So in general, in summary, that means the collaborative effort between internal control, compliance function, even at also the audit at the tail end of it as a third line of defense. So that's it.
Okay, thank you very much, Mr. Obina. Mr. Pius, there's a question from Abugu Gabriel Chooks, is asking you to explain, the reports meant for CBN and those meant for NFIU.
Okay, I hope my mic is on.
Yes, we can hear you. No, you're muted now, sir.
It's better now, right?
Yes, we can hear you now.
Okay, basically, yeah. For the commercial banks, really, the threshold transactions go to the CBN, and STRs are specifically for NFIU, suspicious transactions. So the $1,000 and above or its equivalent should go to CBN narrowly, and then the mandatory reports from corporate and individuals should actually, which is the section 10 CTR, which they call currency transaction reports. So basically, those ones should go to CBN for their own consumption. But if they do find anything suspicious, they can also escalate to NFI. Yeah.
Okay. Thank you very much.
Thank you very much, Mr. Pius. You're welcome.
So, Mr. Samuel, there's a question here from King Okemi for you. How do you view the current surge in hackers and cyber criminal group activities? And what steps should fintechs take to avoid becoming tools for money laundering and proliferation financing?
Okay, this is an interesting one. I hope you can hear me. You hear me correctly?
Yes, we can hear you. Please go ahead.
Yeah, so just to refer to the earlier question I answered, about how, the informal sector, how there's still a lot of populations in the country that are not using digital mediums and things like that. So as if you can imagine it, as things migrate to the digital space, it becomes more lucrative for hackers and cyber terrorists, cyber criminals to attack. So, Nigeria is constantly coming in prominence, on the global stage. Different unicorns are coming out. The revenue being generated from fintechs and the like. So, it's becoming like very how I put it, it's attractive to foreigners. We had a session recently with somebody that was talking about Namibia space in particular, that they were having a huge cyber security problem. And of course, if you analyze the situation, it was because of poor legislation, things like awareness, not much awareness about cybersecurity practices, things in the country and infrastructure. And Nigeria has some of those issues as well. So what we need to do, financial institutions and DNIPPS, they need to adopt technology. This is where Probe comes in again. I don't mean to keep on promoting our company, but yeah, that's where our technology comes in again, just to help with, what I said before, KYC, transaction monitoring, and the rest. But apart from that, you also need to ensure that you strengthen the infrastructure of your companies. So you need things like using reliable cloud services, like certified AWS, Amazon Web Services, Google Cloud Platforms, Azure, things like that. You also need to make sure you implement certain measures and tools in your infrastructure. Things like role-based access control. Not everybody in your company needs to have access to everything else. Certain people should have access to certain things. Implement firewalls to block all these kind of attacks, cybersecurity attacks. Encryption is very important as well, not just at rest, but in transit as well. So, of course, everyone here, every website you're dealing with, or your company website should be on HTTPS, for example. And at rest, your data should be encrypted, things like that. You should use a multi-factor authentication, which is very, very important. So not just logging in using a password, but also authenticate via emails or code sent to SMS or applications that you can use to generate codes as well too. Passwords need to be very strong. Don't use simple passwords, A, B, C, D, E, F, your name, your mother's name, your date of birth. People can easily guess those kind of things. And on your infrastructure, you need to perform regular vulnerability scans, penetration testing. You have a very defined business continuity and disaster recovery framework in place. do constant monitoring, back up regularly, take logs of all activities on the platform, every single activity on the platform. You have to look out for not only external threats, but internal threats a lot. There's a lot of cases of internal fraud going on in a lot of commercial financial institutions, banks and things. People slowly and gradually accumulating money from customers. And before you know it, they've gone, they've disappeared. So, and of course, compliance as well to regulations, Nigerian data protection and the rest. So I hope that covers the whole breadth of that question.
Yes, it does. Thank you very much, Samuel. Mr. Lamanti, there's a question here for you from Rose. She's asking, are only compliance officers responsible for filing STR and CTR reports for the banks? Can tellers and customer service officers, who are the primary point of contact with customers, register on the GoAML portal to file the reports?
Okay, thank you very much. Filing reports to the NFIU is only for compliance officers. However, within the organization, there should be a process for escalation. Like for tellers or customer service officers, there should be a laid down procedure when they notice something, either when processing transactions or opening an account. There should be a process for them to now escalate those instances to the compliance team for onward transmission to the NFIU. But for them to register, it's only for the main person responsible for filing reports is the chief compliance officer. However, because of the volume of work, he can delegate it to the money laundering reporting officer. But it's only for the compliance team. But there should be a mechanism for everyone, because even this AML starts from the gate. Even the security man, if he interacts with customers. So if he notices something, there should be a procedure, either a mail or an officer that within the branch can collate these instances and now escalate it to the compliance team. But for filing report to the NFIU is strictly done by the compliance officer, because it is expected that at that level they should have expertise and should be well trained to file these reports. And also for control purposes, it's not like what the previous speaker said about access control. You can't, everybody shouldn't have access to the reporting platform, because it's very sensitive information that it's there, especially when it comes to suspicious transaction reports, information about politically exposed persons. You can't have everybody having access to that. So once there's a case of tipping off, you know who and who should be held responsible for that. So it's strictly for the compliance team to file that report. Thank you.
Okay, thank you, Mr. Lamanti. Yetunde, there's a question here. Can you shed more light on third-party privacy risk management framework with respect to information sharing and data transfer? And what do you think financial institutions and other financial institutions can do to effectively mitigate and manage the associated risks?
Okay, if I get the question correctly, so third-party transfer of shares. So, for example, when we're talking about processing of personal data, we would have the data controller, for instance, and the data processor. So the controller is the one in charge of the information or the data, let me put it that way, and determines what happens to that information, however it's processed. That, of course, dependent on the type of business that the controller is involved in. And then the processor is more or less a service provider that executes those instructions. So from my understanding of the question, what are the ways to ensure, third-party, transfer of data is protected? It's just having agreements. Obviously, to start with, if we backtrack a little, every organization that processes data must have policies, procedures in place that ensure proper protection. So when you're having those kinds of transfer or exchange of data, you have to have protection, data like clauses that ensure data privacy, confidentiality, things that you've spoken about as well, a limited accessibility, those kind of things. And once you are regulated under the regime and you have your policies and processes, you must ensure when you're transferring that the target organization or third party, as you call it, also has those same, checks, balances, procedures, and protections in their organization, so that, there's protection across board, because at the end of the day, the processor has the ultimate obligation or responsibility to the data subject. And, if they are sharing with third parties and the third parties are processing that data, there has to be, what should we call it? A mirroring of obligations in the contracts that, you are sharing for or that you're executing for that type of processing. And the same applies for, like, for example, cross-border transfer of data as well. You must ensure that, there's type of reciprocity or the same level of protection in terms of data privacy and protection that applies in those jurisdictions. And you must always have contractual terms that ensure that those are in place in those organizations. And that's it. I mean, of course, in special instances, there has to be a higher level of consent by the regulator, depending on the type of data being shared and in what jurisdiction is being shared with, etc. But, that's going into further details. Thank you.
Okay. Thank you very much, Yetunde. Onye has a question here. She's thank you for this free session. As a compliance officer, how would you respond when a customer provides all requested information, yet a transaction remains suspicious and management dismisses concerns during committee meetings? Mr. Oluwanifemi, do you want to, respond? So she's expressing, concern here that how would you respond when a customer provides all requested information, yet the transaction remains suspicious and management dismisses that concern during committee meetings?
Oh, okay. I don't think management should dismiss suspicious transaction. That might sound somehow to me because I've never experienced that before. But like I said, I used to say, compliance is not only, I mean, it should be a culture of a financial institution. That means from the management staff to the board to the entire team and the entire staff. So I would say management should dismiss any transaction that looks suspicious. Though if the customer provides the necessary information, fine, and it's checked out, that's okay. But as long, if it still remains suspicious, it should be reported, in my own opinion. Thank you.
Thank you. So Pechuku Ewa is asking, in the fight against money laundering, and I'd like Mr. Olaboke to just respond. In the fight against money laundering, FTA/PF, what is the importance of obtaining TIN while opening a corporate account in a bank?
Okay, thank you very much, Mr. Shino. That's a wonderful question. So on the surface of it, you think TIN is just for tax compliance, but it's also another measure to help you identify companies. So today, if you want to identify an individual, you can look at NIN, you can look at BVN, you can look at driver's license, a number of things, and then you can cross-match across to see, the validity of that entity. As of today, what we have for companies is just the CAC number. So what TIN does from an identification perspective is that it gives you another layer to look at a company from. Then also, if we look at from a financial crime perspective, I'm sure a number of us know that tax evasion is also a crime, right? And the new regime is really moving towards that perspective, wherein if you are not paying tax, of course, it's a crime. That is a global phenomenon. And I think in Nigeria we are beginning to gradually begin to accept that if you don't pay your taxes as expected, then that's a crime. So these are some of the underlying reasons why as financial institutions, and if you look at our regulations. From the CBN due diligence regulation 2023, it is clearly stated there, tax identification number is required. And I'm also aware that there is also a drive for tax identification number to be collected for individuals as well. So that is where identity is going to, and it is just important that everybody jumps on that wagon for our collective good.
Thank you very much, Olagoke, and thank you to the audience for the very interesting questions that you shared. And I also want to appreciate my panelists. Please, can we just give them a round of applause for committing more than 3 hours of their time today. I mean, these are all busy executives, but you have contributed to this conversation. Again, the conversation is about, basically moving beyond awareness. And hopefully, we've been able to, create the consciousness that there's still a lot more to be done collectively to secure Nigeria's financial system. And then, to enhance, our functions in navigating, this particular terrain. So thank you very much, everyone. I'm really grateful for your time, for the questions, and to the audience. Thank you very much for participating. I'll hand the mic over to Tosin.
Okay, that has been just amazing. In this 1 to 2 hours, I've learned so much more about the AML, CFT, CPF regimes in Nigeria, the legal perspective on things. I think I learned so much more today about these DNFBAs and how they are regulated as well and what's expected of them. So it's been quite interesting. I want to first thank our wonderful moderator for the beautiful job he's done, taking the questions around the panelists. I would also like to thank the panelists. Thank you so much. I know that you are very busy and you have lots of work to do. So this has been, we appreciate this so much, your time, the time that you have given even before this event to prepare and to get everything ready, the time that you have given today to educate and to give your perspectives. We appreciate it so very much, so very much. We're so grateful that you have stayed with us through this program. We appreciate you so much. And all of the people who have attended today, it's a working day, it's a busy time for you, but I'm sure that you've seen the value. I'm sure that you've learned a lot as well as I have from this session. And I want to let you know that Probe Compliance will continue to hold sessions like this because we believe in the power of communication, education. We believe in the power of discussion, like bringing something to the table. Let's talk about it. Let's understand. Let's discuss. Let's dialogue. And that's what we have done here.